Check 1 2. Check. Mic check. Mic check. Mic check. Good morning out there. How do you do this morning? How's everybody doing out there? I actually, I ripped off the case to I did a bunch of work earlier this week to ensure that the stream keeps continuity today. We don't lose the stream. The second thing is I grabbed a camping fan. I took the glass off the case this morning, and I grabbed a camping fan. So I'm blowing directly on it. I did order an liquid cooler for one of my rigs, but it's not here yet, and I have to install it as well. And I typically have a guy a small shop that does my work for me. So I'm going to try to get that done over a weekend once it arrives. Hold on here. Just get a couple things going here. There we go. If you are joining us for the first time, or you don't normally join us, or actually, could I ask you for the first? If you're a community member, any kind of community member, if this show helps you out, I did post a link to the show on Twitter, and I believe I pinned it. Is it possible if you could like the post and repost it for people to join us today? I would be very grateful for that. This is kind of one of the big days for us around here. We really spend a lot of time leading up to these rate decisions. We spend weeks going over what to expect today. It's a big day for us. These rate decisions seem to be the culmination of a lot of work by the community and by moderators, administrators, yourselves as well, right? We're here for this because of I don't know why it is, but what it is, but it is. I'd appreciate if you could do that. If you could just go to Twitter really quick. I believe it's a pinned tweet. Let me check. Let me see if it is. Yeah, if you could like it and repost it, I would appreciate it.
Six.
Yeah, turn some of this down really quick. I've got a bunch of stuff in the background. I had to put the audio on.
By Sky News Arabia, and this is via a translation. Says that new explosions affect pager communication.
So just a few things about today.
There's a second round.
The first thing for today, if you are new joining us, just some stuff for you to understand. One, we are going to have Jerome, of course, live on the show during the broadcast. For his presser. We'll also read to you or highlight the press release before the presser with Jerome. We also have new squawkers going today, one from London, and also the Financial Juice squawker will be on today. If you watch via YouTube, the chat is open. You just have to subscribe. It's free. Just click subscribe, and you can chat with us throughout the day. Join us in the chat. If you one note about, and also the Twitch stream has an open chat on it as well. Please follow the guidelines set forth by the moderators in the chats so that you can stay in the chat. We don't want it to be overrun by nonsense if things get crazy, of course. The second thing, though, would be if you are looking for a real-time stream, Twitch is natively real time. The delay, depending upon your internet connection, should be about 1 to 3 seconds. I have fiber here in the office, and so if you have great internet, it should be no more than about a 1.5 to 3 second delay from real time. If you are watching on YouTube, YouTube natively delays live streams by up to 7 to 13 seconds. And they also discreetly continue to do it in the background on you if you speed up the live stream. But if you prefer YouTube, what you can do is go to the cogwheel at key moments in the market and hit the playback speed ×2, plus ×2. And the live stream will become natively displayed, without any delay, like a second or two, for at least a minute or so. So if you're like, I want to see, like, let's say it's like 2 p.m. or something, and you want to stay on YouTube, you just speed up the playback, and then it'll come real time, especially if you're taking a trade or closing a trade, that kind of stuff. What else? Bazra, good to see you this morning. Good to see you, my brother. Definitely good to see you, my man. Trader Podcast, how are you? I did not see it, and I put it on my list, Trader Podcast, to check out your handle this morning, and I just haven't gotten to it. But you know what I'm going to do is I'm going to do it right now. That would be do you mind if I do this as a segue? Let's go to it right now. Hang tight. We'll go to your handle right now, and we're gonna segue into that next. Oh yeah, hold on here. What do we got here? Is it posted on your? There we go. I got you, brother. We're gonna segue into that right now. Give me one quick second here. Let's go over. Good morning, Trader Podcast. Good to see you, brother. So a few things for you out there. Give me one quick second. We're going to segue into first, welcome to the live stream. As you know, it's a big day for us. If you want to chat, you can. Chat's open. You can just click subscribe. Please like these videos too. If you're on Twitch, hit the like button. I would appreciate it. If you're on the live stream on YouTube, hit the like button that's underneath the video player. I would appreciate it. If you could, I did post links to the live stream on FinTwit. It's on my profile. Just look up CaptainJimJames, and if you could like and repost that live stream. Some people want something to watch throughout the day, have a companion. We are here. We're here Monday through Friday from usually 9:30 until 4 p.m. if we can be here. So let's segue right now. I want you to follow out there if you don't already do it. Please follow Trader Podcast. I'm going to show you. As a matter of fact, he's a contributor in our Discord. He's someone that we trust, and this guy's very intelligent. I'm not going to tell you what he does in his real life, but this guy knows what he's doing. Let him tell you what he does in his real life. And I get along with Trader Podcast because I love probability and statistics, and his background professionally is in probability and statistics. So he reminds me a lot of Jedi Marcus. Jedi Marcus follows data and numbers and dates and times, and that kind of stuff fascinates me, especially in the stock market, and it does as well for Trader Podcast. So we're going to switch over here really quick. This is his handle. You can see it's at TRADERPODCASTE. Hopefully he's cranking now. He's only got 9,000 followers. I don't know why. This guy is also very famous on Reddit. Like, people know this guy. Like, this guy is, like, he's got 10,000 followers. He needs more. He needs like 20, 30, 100,000 followers. If you were to relate his followers on Twitter to Reddit, he probably has 1 million followers on Reddit. This guy is a king of the memes as well. And also his buddy, we've had him on the show, Vol Signals. You know, Volatility Signals, if you know him at all. He's a friend of the show as well. This guy's like gangster with Gamma. And these guys are always talking back and forth on FinTwit about Gamma in the market. It's very insightful, so follow him as well, Vol Signals. We're going to play an introduction here for you this morning. And, oh, look, in collaboration with Vol Signals. Awesome sauce. Okay, you can't see it here, but it says in collaboration with. Below it says Vol Signals. Right on, right on, right on. I didn't even see that. So we're going to play this for you right now.
Well, it's expiration day, and the Fed's a meeting to discuss. The market's on a teeter, wonder when who'll get thrown under the bus. Is it 25 or 50 rate cuts rolling down the wire? A binary event like gasoline on fire. We've been drifting up and sideways, thanks to all those flows. The corporates keep us bullish like we're floating on our toes. Jordan Bennett got our backs, keeping VIX from flying high. But you know that beach ball's gonna battles right into the sky. It's a dangerous ride when VIX is priced so low. Feels like we're all secure until it's time to blow. We're swimming in long gamut, catching nouns along the way, waiting on the Fed's big meeting, where the market's gonna sway. You can see it on the charts.
Just for those of you
just
keeping
a nice
count on
catching
views
spree.
of former FOMC
Long gamma's got us
officials,
dancing,
but
but
I
it's
was just going
shaky,
on
can't you
CNBC
see?
noting that the Fed should
We've
cut
been stuck in
25
wait and
basis points
see
today. It's got
since
former Fed
inflation
member
numbers
Billard saying the
dropped,
Fed should cut
and
25
nobody
basis
moves
points today.
till the Fed speaks
Again,
up, 'cause
obviously,
we're
he's
sure
not
the
a focus on
market's
the
propped.
FOMC, which makes
Sean's
me
been
aware
keeping
given
ball down,
the focus in
taking
the media
fear
on
right
comments, the
out
likes
the
of Dudley,
door,
etc.
with a JPM collar hanging heavy like a weight upon the floor. Less Vega, more Gamma, like a slow road toward the end. But cold Wednesday's peak Vanna, it's a party we can't spend. It's a dangerous ride when VIX is priced so low. Feels like we're all secure until it's time to blow. Yeah, we're swimming at long gamma, catching knives along the way, waiting on the Fed's big meeting, where the market's gonna sway. And now the blackouts here, corporate taxes too.
Voice news disconnected.
Index strains are on their way, still we float like nothing's new. 0 day to expiration, sellers vanish in the night. When GX flips regimes, it's a whole new kind of fight. But we're shorting strikes, big shorts round 5 set at 0. But the chalk keeps us chomping up, no place for fear to show. Just wait till the expiration ends and into the Fed Negan we slide. That switch is gonna flip, and Lord, it's a nasty ride. It's a dangerous ride when VIX is priced so low. Feels like we're all secure until it's time to blow. Yeah, whistling in headlong gamma, catching nouns along the way, waiting on the Fed's big meeting, where the market's gonna sway. So hold on to your hats, folks, this ride's about to turn. Charm will save you now, there's a lesson we must learn. When the fish default pots and the rates of fight is set, there'll be less counting dollars and licking moons, you bet. It's a dangerous ride, it's a dangerous game. When the market goes nasty, it'll never be the same.
That was Podcast Trader. That was Podcast Trader, bro. That was probably the best one I've seen so far. That might be the best one you've done out there. So that was really good. And it had good rhythm, and it's shocking how far AI has come along. 100%. Let's get into now a few things. If you're just joining us, you just click the subscribe button on YouTube and you can chat all day long. Twitch, the chat is open. YouTube natively delays the stream. Twitch is in real time. So if you want a real-time stream, you go to Twitch. If you want YouTube, if you want to stay on YouTube because you're more comfortable there, at key moments you can go to the cogwheel, hit the settings button, and click ×2, and it'll bring YouTube into real time for at least a minute or so before it begins to lag again. That's a native thing with YouTube. There's nothing we can do about it here. Also, what else I got for you? I think that's it. Let's get right into it this morning. We're going to switch right over. And there's a few things here to look at this morning in preparation for the Fed Chair Jerome Powell's rate decision. We'll give a quick overview of the market, how it's poised for today. And then we will also give you some data from GS and McGilligot and maybe some other trading desks across the market. And from there, we're going to take a look around the market as we get closer. And we'll take a look around the market in particular because we were discussing TLT the other day and waiting for the next entry on TLT. That's on your bottom screen down below here. And sure enough, it's heading back down to a place for you to consider a second or third entry in TLT. We were discussing that earlier. We got some alerts down here to try to swoop in and maybe buy the next TLT dip. Yeah, that Jackson Hole song was really good too. 100%. I only expect more from here from those Jerome Powell. Let's be honest. We could probably make, or Trader Podcast could probably make a greatest hits album at some point, couldn't he? Okay. Let's start with an overview of the market for you. I can see that people are asking questions about, do we get this? Do we get that? Do we get blood before or after? That's a good question. Someone just asked, are we getting blood before J. Powell for Vixpiration? And that's a really good question. I wrote a brief last night for the community, and I could have written the brief two ways. We'll take a look at it right now. Let's go over to the matter of fact, we're going to do some cool stuff this morning. We're going to do it just like we did it yesterday. Let's go over to the trigger screen here. And, I got a lot of stuff pre-made here already. I've got a bunch of stuff. This is all drawn in already. I already did this. Like, where's the 4-hour marks? Where are the 4-hour bars? Where's STX buy down here? Where's some prior resistance in these yellow blocks? And then the price target of 570.19 above. This is R3 right here. And then we've got the RTX sell box higher. But we can do this together if you want. Maybe you can follow along at home. And we can start it from scratch. So let's do that. Let's do that this morning. It's actually a good time to do it. There should be a lot of people here, and we'll just start from scratch. I delete and rewrite these things all the time, so we'll do that. We'll remove every drawing. We'll remove the pivot points. Get rid of that, and we're just going to look at today. Fairly simple, right? Easy. And the first thing that we're going to do, the first thing that I would be doing in particular, this is how I start my day. So if you want to know how I start my day as a trader, let's do that right now. So as a trader, the first thing that I'm going to be looking at, of course, is going to be a 30-minute, or let's start with a daily velocity and just see where we are in velocity for the day. And the reason I'm looking for that is I'm looking for higher time frames. Do we still have Momo on a monthly and a quarterly basis? We are losing weekly momentum here. That's not good to see. Right? We know that there's a couple things. Daily velocity looks like it can go up on a daily velo on a daily basis can go up. Weekly velocity is looking kind of weak. We'd need to have a nice close to this week to turn that around to the upside. Otherwise, we are coming into some seasonal weakness on a weekly basis. You can already see it right there. So it's good. That's good information to know, right? That's that second half of September, October weakness showing itself. The next thing that I look at on a daily basis would be a 30-minute velo, and this is for my intraday and weekly trading. And we are recovering on a daily basis here, which is good to see. We do have a new low, though, over here from yesterday. And we also are coming into some negative hourly velocity. That doesn't look good. For bulls, at least, it doesn't look good at the moment. Usually when I'm trying to buy a dip, I'm trying to buy, especially on a weekly or intraday basis, trying to buy hourly velo on a low and running it up here, right? Buy it down here, sell it up here, right? Buy it down here, sell it up here. Kind of safe usually. I don't like buying dips down here if the daily is lower, or I don't expect those pops to be huge, like big giant moves, unless we're coming to the upside on daily velo and we're at a low down here. Then I would expect a giant move to the upside on an intraday basis, right? Daily's negative, coming positive. Hourly is on a negative and coming positive. Kind of a sweet setup right there for a giant move higher. So we're not quite there right now either. This isn't the best setup for bulls, but we are event and data driven today. So things can change. Things can change today. So let's take a quick look. So we're on 30-minute basis. Then I'm going to jump back now to a 4-hour basis. And I want to take a peek at where the buyers are. Let's have a look-see here and just see where our buyers are on a 4-hour basis. Right down here, we got this 4-hour block down below. Right down there. See him? I'm going to pop that block in right there. We know that we have buyers here, here, and right here, right? Just buying it up. You can see them, right? Demand right down inside of here. We also know that we've got some sellers on the upside, don't we? Look at those guys up there trying to sell us out. I'm going to pop that block right there. And what can we see in a higher frame? Consolidation, right? This is the Mr. Yen finger trap, right? Diddling in the middle on a 4-hour basis. No conclusive breakout to the upside. No conclusive breakdown. The new low to the downside, right? At least on a 4-hour basis. And we've got our next order block right down here, right? Or demand block right down in here. Right? See that right there? Fairly easy to see. You can also probably figure out something else here. We have natural resistance above on 0s and 5s. We've already traded 560, 660. So we broke above 565. That's bullish. And we're looking for the next 0 or 5. That would be 570, right? So we got 570 to the upside. Let's push that up. Right, man? Nice and simple, right? You might be expecting if we tagged this 566 that the next attempt would be just below the 570 and then another tag higher. That's what a bull would want to see, right? Something like that, right? You'd put us maybe at 571 and maybe 571 and some change, somewhere in there, right? Roughly. You don't need to be measuring anything. You can already tell this fairly simply, right? Pretty easy to see. 4-hour basis. Shockingly, our daily trigger is also coming up into our 4-hour block here. We do know, though, something that our hourly base or our 30-minute basis daily velocity, it's bullish. It's bullish. There's one lower block there, but we should expect any blast down here to initially hold. We might dip through, but we shouldn't blast straight down immediately if we have a pullback to a daily basis. So that's good to know, right? There's some kind of support down there. We also know that the weekly velocity is not strong, is it? So if we do break down, right, catch a new low. If we begin to break down and form new lows over here, we would expect that to break. We would expect that weekly not to hold. So today and tomorrow, we're kind of like at this place where what? If we get a large disappointment, the entire run into FOMC should be erased, right? So if we get some bad news, we're going to trade 500, aren't we? Right? More than likely, this whole entire run will be done, and at some point, we will trade. If we get a disappointing, like no rate cut for you, we would expect at least to trade down below here, targeting that 500, 490. We would expect that not to hold, as we already know that weekly velocity is very weak. It's becoming negative. Okay, so we're not going to expect this weekly to hold. We would trade 500. Next thing we're going to take a peek here at is an hourly basis. So we got our 4-hour blocks here. Let's take a peek at the hour and see if those line up. And they do, don't they? We got the hourly block lining up with the 4-hour block. We've got the hourly block lining up with the 4-hour block down below. It's pretty good, isn't it? This looks fairly good. Excuse me. Pretty happy with this at the moment. The next thing that we're going to take a peek at here, if you're at home and you're following along, is pivot points. So we've got a pivot point tool that we give to our membership, to our community. Number one, we've got a free community, and we got different levels of services that if you ever want them, but you don't ever have to sign up. You can just watch the show. It'll always be free. What we originally did, we'll always give to the community for free. And we're going to take a look at on a 1-minute basis here. And let's take a peek. See what we got here. We've got the pivot point. Pivot point is at 563.50. On an intraday basis, you're bullish above the pivot points. You're bearish below the pivot point. So we'll snap that line in next for you, right? We'll snap a line there. We'll make it yellow. We'll put a big old fat 4 in it, and we will write right there PP. Make that a small little 20, right? PP pivot point, fairly easy to see. And we also have a pivot point right inside of this resistance here, right? Just below. So we're going to snap a little line in there. That's R1, right? Matter of fact, we'll make this one white. Let's make that so we can differentiate. We've got that 570. Remember when I said to you earlier, I said to you would expect the first attempt at a 0 to reject, right? And then maybe the second one to get over 570, right? And not shockingly at all, we've got a pivot point right here, don't we? And we'll make that one yellow. Right, and this 570, we'll make that one white, just like the pivot point, kind of a big demarcation point. Then at 572, this is R3. We're going to make that one red. Okay, that one will be red. And then rather than R4 and R5 be resistance points, we're going to make it a zone. So this would be an outsized move, right? This is when you trade outside of your daily range, a 2 sigma move. And what we're going to do here is we're going to do a red box. We're going to write RTX sell up here. Or excuse me, RTX sell. Any of you guys know about our boy, hold on here. Yeah, RTX sell. Any of you guys know anything about Bob Kendall and what he does? This is more of a zone. Come up here, it's more like that, right? Or it's more like that, or it's more like this. Just a zone that you're looking for, not exacting. You kind of know where the exacts are, but it's more of a zone than anything. A note on RTX sell and RTX buy. The RTX sell tends to hold true on the upside. STX buy on the bottom side. We can actually, or in my experience, we can make downside STX moves 2-3 days in a row if things get nasty. So we know where the PP is, right? Where your PP is. We know where STX sell is. We know where the target is, right? The target is right here. Draw this in. This is the upside target just above 570. The actual target should be like 571, 572, somewhere in there. And I'll show you this on Gamma here in just a minute. Somewhere down in here, that's your upside target. This is all gravy up here. This is all gravy up here. Right? There's your PT right here. The green boxes are your order blocks on the 4-hour. You got another one down here. It's a nice little lesson here, isn't it? You got another one down here. You got another one right here. This is S3. So this is 560.37, 557.69, 554.59 is S3. We'll make that red. And then we've got what? The daily trigger parked right on a 4-hour block. And we have STX buy on a daily basis. There are weekly. This program here actually shows you weekly expected moves as well. If you want the access to this tool, or if you have access to this tool, you can change the time frame to a weekly basis, and it'll give you downside and upside weekly ranges. So we'll put this one. I'll make this one greenish. Yeah, like that. That's a good green. And we'll write this one STX buy. And you would expect, not every time, but so this is out of every 10 sessions, STX, RTX, you have a possibility of hitting it about once every 10 sessions. If you do hit the uppers downside RTX, XTX, it's usually a good signal that would be the bottom and that you have a chance to buy a dip or sell a rip on the upside. So we'll leave that down below for you. Now let's talk about today. Let's go to a 30-minute basis here. Let's go to a 30-minute basis down here. It gives you a little bit better understanding of support and resistance, right? Signposts along the way. So this morning, from last night's brief, we talked about a move higher and then the possibility of a move lower and then higher later in the day with a target down below of 556 right in here. 556. Now, that move lower is not required. I didn't put that in the brief. I should have, but it would look more like this. So let's say we've got 2 p.m. Call this 2 right there. Make that 2 p.m. right there. Make that white. Make that a 2 so you can see it. Excuse me. Apologize. I'm losing my voice already this week. Now, this could be 11:30 in the morning, 2 o'clock in the afternoon, somewhere in there. But roughly by 2 p.m. Not required, though. And we have an upside move for today, and that would be all the way up here. Here's R2. Make that 4 o'clock. I got it's 14 at 2 o'clock. No, that's a little bit too far. It's 4 p.m. Give me one quick second here. 2:30. Right up in here. And this here should be just a flat line. This would be the expected move today for me. Now, a few points here. On the highs over here, we recommended a putback spread, right? And then into the close yesterday. Not there. I think, where was it yesterday? Hold on a second here. Yep. So let's talk about the show yesterday. During the show yesterday, we recommended a putback spread right here with a target date of November 15th. That would mean that you would date it 90 days out and look to take profit either today as an event, September 30th as an event, as an end-of-month trade, October 31st would be your next exit, or the election volatility in November 5th and the FOMC in middle of November around the 15th. So if you're positioned here for those of these events in the future, you should be good to go. There are other opportunities to put that trade on. While we have these events, if we do squeeze higher, you can also possibly get another opportunity to add that bear ratio spread on for down the road. Make sure you're using 0s and 5s, right, to put that trade on. And here's another thing. Into the close yesterday, we bought this dip with a call spread, didn't we? Did this on stream yesterday with a call spread. So you have the hedge going out into November, and you have the upside exposure into today. Now, you could be taking your money and running here this morning if you want to. I think that's fine. If you want to take your call spread off, collect the cash, and just sit back and relax, that's what you do. You notice we have this dotted line down here. If you're in that call spread and we just go straight up, you're going to make more money. If you're in that call spread and you're like, you know what, Cap, I want to stay in it just for that extra juice, you can actually absorb this downside move, can't you? And if you were long down here yesterday with us on that call spread, if it goes the wrong way on us and the rate decision is like, I don't know, no cuts, you will still be given the opportunity to exit that trade and be hedged into November. Do you see how we structured this trade yesterday? You're structured for a hedge in the market. You're structured for upside exposure. And if it goes against you today, you have an opportunity to exit in an orderly fashion. Make sense? You see it now? So we lead you into this. We work our ways over to this, and you should be, if you were able to get your hedge on yesterday and take that call spread yesterday, you should be sitting like a pig this morning. Like literally, you should be sitting back, you got your crown on, you got money everywhere, and you must be feeling very good at this moment. Now, for the rest of you out there that didn't do any of this or didn't watch the shows for the past couple months, we're just making stupid money. This might be the best year ever, by the way. If you aren't that person, if you're just like hanging out and you're like, well, how do I get long and short? I'm tuning into this live stream and I want to know how to make some money. I want to gamble today. There are some opportunities for you. Personally, I recommend you don't take them. But there's a couple things I want you to be aware of. A couple things I want you to be aware of. If you're going to gamble, just take some zero dates. If they burn, you take a second rack of zero dates down here, and hopefully they print. Now, there's one other thing about that. I was looking this last night and this morning at some prior events, and I was also reading some of the bank notes trader notes yesterday, and the banks do not want us trading out of range. They've pumped so much bullshit out there. It's all meant to rein the market in, and dealers want to rein the market in as well. They don't want to see the market go higher, and you guys are all out there gambling. Dealers want nothing less than for us to trade, be range bound today, 1% here, 1% there. Thank you very much. We go nowhere today. So you might see an extended move after today, or after, into Friday, you might see the bigger move. So maybe you can look for some one dates that are cheap, 10 cents, 1 cent, or maybe even into Monday. Now, as for expectations into Friday and beyond, yesterday's show, I went over those with you, what to expect. I also went over with you in prior shows the traditional pattern of September OPEXs in election years, and how the market tends to rein in outsized moves and follow a specific pattern, believe it or not, right into the election. So if you're a more responsible trader, the best bet for you is not to be gambling with zero dates here, or even one dates into tomorrow or down here into tomorrow. Truthfully, the safest trade for you, if you're not already pre-positioned, is if we are in an OPEX and running in a September OPEX, in particular, a seasonal OPEX for October and an election cycle in November. Your best bet, if you are not positioned now, is to trade the extremes. So if we do some goofy stuff like this, we blood it down for Vixpiration, we go back up. Let's say on Friday for OPEX, right? So you get your Vixpiration, reset the VIX, right? Or maybe we go up here, we burn the VIX down, then we reset, or then we get the VIX pumping, right, into Friday, and then we go back up here into actual OPEX. We end up selling the last week of the end of the month, right? And then we get the first week of October of buyers. Then we go all the way down into the election volatility. What I would say to you would be trade the extremes. I would say to you that any upside moves can easily be shorted, and any extreme downside moves can likely be bought. If you don't know what I'm talking about here in this kind of stuff, I would recommend that you join us in our Discord. I have examples of prior setups just like this. In particular, check out the 2012 September OPEX. We had a FOMC QE3 that happened a week before. We blasted up, but it got reined back in, and we followed that right down into November 15th when Obama and McCain had an election, and it followed the same path as most of these September OPEXs. There's a clearly defined trend or price action and trend that time of the year, and there's a lot of fuckery. There's a lot of fuckery after today and after tomorrow into about the end of the first week of October, where they're going to burn bulls and they're going to burn bears, and they're going to squeeze both of you out, and then they make their move lower. And then the fascinating part about this is if you listen to Jerome today, Jerome is going to likely give you 25 or 50 BPS and need to massage you and the greater market on one specific thing. That is that a lot of our data, if you look at all of our data as a whole, over a long period of time, like maybe a 10-year chart, 20-year chart, we have natural economic trends where maybe one trend is consistently like this, goes out of trend and in or out of trend a little bit. Then we had the COVID. Let's say inflation went way up here for COVID. We're coming right back down right here with a little bit of velocity. If we have a normal economic trend that goes down, and we blasted way down here for COVID, right? We have maybe like normal bear and bull cycles in here, short-term debt cycles like this. What they're attempting to do right now is arrest an overshoot in data. Right? They don't want this right here. Right? So if you got a trend going like that, they don't want to overshoot it. So they're trying to arrest velocity. Right? Stop it. They don't care if it overshoots a little bit. They're trying to bring it back into line like this. We have not overshot these things yet. So I am open, of course, to arresting that velocity in different data points. I'm also expecting them to say that they are open to rate hikes in the future. That right now, for the next 1 to 3 months, they're going to attempt to arrest some of this data that's coming in and be data dependent. If you see bears out there telling you that we have overshot, we have not. There's no data saying that we've overshot. I would get worried in about 3 months. 1 month of data does not show trend. 3 months of data from this point will begin to show trend. When we get into November, December, January, we will have a better picture. You will have a better picture. The Fed, the Treasury Department will have a better picture of new trend, overshooting, or an arrestment of this data. By the 6-month mark, we will know if we've overshot. We will know if we are going to actually overshoot. And if we do begin to overshoot, I would watch out. They will begin to get aggressive with the QE. But as of right now, we're not there yet. So I'd be expecting the Fed to attempt from now into end of year to arrest the velocity of data that might swing lower or higher outside of normal trend over time today. So there you go. That's what you got for today. Does that look okay for you? I'm assuming this kind of looks okay, right? What do you got? We got the 18th. That's 19th. I got to slide that over, I guess, a little bit. 18th, I got the wrong time here. Right down there. We'll move that right up there. That's better. That looks better, doesn't it? I was on the 19th over, or the 20th over here. So we'll make this one, let's put this one Wednesday, right? Today's Wednesday. 2:30, right there. All right, right up there. Target. Make sense? Spread that out for you. Looks kind of wonky, doesn't it? There we go. That's beautiful. Bear or bull's gonna like that right there, aren't they? Just wham straight down, wham straight up. No requirement to go down there. I'm now going to delete that. Crayon drawings. We're going to go back to a 1 minute. Uh, 556-ish. I'll do a buy the dip down here. We'll begin to think about buying the dip down here, unless we get some bad news. We already have our price target written. Hold on here. Keep that right about there. We're going to get rid of our pivots. One quick second here. Put the news up for you. Yeah, I wouldn't be short today. Put ratio spreads, you're not going to get blasted. You're actually going to make money if we go higher. If you hedge with a ratio spread, you'll actually make some money. Just basically looking for a dip to buy today. Whatever your poison is, in my view. I just don't like recommending that because if we go down and blast down to the depths of hell, people get mad and be like, you said we were going higher. Stuff like that. We want your crystal ball. You must be right at every moment. Chomping on the crayons, baby. All right, so I'm going to read to you now. I'm going to read to you now, or I'm going to go and we're going to look at a few other things here. TLT. TLT, I've got a buy down at 98.06 or an alert for that. I'd really like to buy $95. We'll see if we can get to either of those. But I'd really like to get in some another trade for TLT down here. It's rolling, which is really nice to see. SPX, let's take a look at that really quick. We're going to look at Gamma. And we're on a 1 hour basis. We're going to switch over to a 30-minute basis on Gamma here. We're going to take a peek at today's Gamma and see what it's telling us. We got some changes today, don't we? We've got resistance on SPX at 56.50. We have local support today at 5600, excuse me. Local support's on 5600. The Gamma flip is below 5590. So note that if we break 5590, that means if we break Thursday's consolidation at 4 p.m. Thursday's consolidation. If we break that, things are going to get violent to the downside. Right? We could easily get a quick sweep to the downside, trade the daily trigger. The call wall currently sits at 5,700, but the call wall has weakened, and the actual top of the market has improved. The top of the market's now at 5,750. It's at 134 million, 96 million at 5,700. So this call wall has weakened a little bit. If you want to snip this at home, you have a computer or something, you want to snip this so that you can have access to it. The put wall is still below at 5,500. So you can snip this right now for yourself at home. I'll give you a few seconds to do that. Break out your snipping tools. And then I'm going to show you one more thing here in just a moment. Or a few more things. This is show you guys got that. Next thing that I'm going to show you here Let me mute my camera. There we go. This is SPX Gamma. I do want you to see a few points here. This is the 5,500 bar. The next bar is 5,400. And the next bar is 5,300. Just so you can see it. 5,500, 5,400, 5,300, 5,200. Giant drop. $5,000, $49, $48. Now, this gamma, this negative gamma is not in play at the moment. Whew. Some of that gamma looks crazy. This is 57.50. This looks like the top. This would be the call wall right here at 5,700 for the bulls. At the money, volatility for today drops off steeply into the 19th and the 23rd. 23rd, there's an expectation of volatility dropping off from the 19th. That would be Friday into the 23rd, and then leveling off a little bit as we come into the 25th, 27th, October 1st, and into the end of the first week of October. Now, this can change, of course. There's some other fascinating stuff going on in here. I want to show you this really quick. CTA positioning on bonds. This is bonds, CTA, SPX, bond positioning, not SPX, this is bond positioning. They're a little topped out up here. I wouldn't expect huge bond buyers at this point, or at least CTA bond buyers on S&P 500 CTA positioning. They've already come into that. They've done all their buying, right? They did all their buying. They need a trigger to become buyers again. That would mean that SPX or SPY or SPX or ES would need to trade likely above 5650, 5700 to be triggered to become buyers again. So this is SPX, CTAs. They're not going to be forced to buy. Dealers are not going to be forced to buy. COTs, LOs, corpos, none of those guys are going to get forced to buy anything unless we go into the spot up, vol up trigger above 5650, 5700. You would trigger these buyers. They could propel the market to the moon. If you don't know what that spot vol up trade is, it's there. It's definitely there. It's just not guaranteed unless price really goes higher. This is vol control. Vol control, they're kind of, you got a little bit of vol control in here. But, they might step out of the way if we trade above 5650, 5700. They become sellers of rips. So this is kind of against the bulls to try to rein the market in. This would imply that if we have any end to buying, that they won't be there to save your ass. Also implies that if price breaks below the gamma flip, that they also will not save your ass. And if you look at Momo or Velocity, the weekly velo is telling you, if you break down below positive gamma, the daily trigger, we're going to rug pull your ass. We're going to take a run to the downside. We're going to trade 5,500. So the market is highly dependent upon two things right now. Staying above positive gamma and the daily trigger. And it's event based. And you also should note that If at any point we begin to trade this stuff up here, the moment that buyers stop buying or have a reason to stop buying, that vol control is not going to save your ass. You're not going to trigger CTA buying. You're not going to trigger dealers will stop chasing you immediately, and we will head back to the downside. So be very hyper aware of that stuff as we move forward. All kind of lining up, right? All kind of making sense. Oh yeah, if we don't get a rate cut, we're trading 5,000 lickety split. Like you blink and no won't be there today, but we should be there in a few sessions. We'd be there. It wouldn't take long. How about no longer than the 31st of September? 30th. I think the last session's the 30th. I'm being generous saying that too, I believe. I believe I'm being generous. All right. So we got everything there. Now I'm going to do this for you. We're going to talk about, I'm going to read to you some of the market prep for today. This would be white papers, trading desks around the country, professional traders, what they're saying as of this morning. What time is it right now? It's already 11 a.m. Need one quick second here. On the gamma front, the one-day VIX is sporting a big premium over the 30-day VIX. I'm going to post the chart for you right now on the Discord.
And former Fed member Mester says there's a very good case for doing a series of 25 basis point Fed rate cuts.
I just posted the one-day VIX over the 30-day VIX. SPX dealer gamma of about 490 million is somewhat supportive. But to be honest, the magnitude of today's decision likely will render any supportive gamma flows meaningless. If the cut results in a sell-off scenario, we just went over that, right? If we get a sell-off, the market is supportive right now. Everything looks great on an intraday basis. But if we get some bad news, the rug will be pulled, even though on the surface everything looks great. Below 55.90, write this one down. Below 55.90, dealers sell into weakness, which could lead to volatility eruptions in a worst case. 55.90 on SPX must hold. If it does not, volatility, volcanic eruptions, hell and death in the stock market. $55.90, snap a line on your chart. Now, I do want to let you know that, let's say this is $55.90. Pretend that's $55.90. A blast down to $55.90 is not volcanic eruptions of doom. You would still want to see what? The new low on $55.90. You want to see the blast down below it, and then the new low. You see that new low? Rip the paracord, the parachute. and start slamming that triple leverage sell button, okay? So there's one for you right there. There's an easy one for you. That's fairly easy if you are a bull. Next up, from JPM. I'm going to post this for you in the Discord as well. From JPM, gold and the rate cut. With gold prices slightly outpacing history in the run-up to this week's cut, a slower initial cutting cycle could deliver some near-term downwards volatility in gold. If the cut today is only 25 BPS or 0 BPS, be careful of a downside move in gold. U.S. equity positioning, ever-changing narratives from UBS Henning Sorbear. Just 1 week ago, after a slightly higher than expected U.S. CPI print, the market firmly believed that the Fed would cut by 25 basis points, seen as, quote, being behind the curve, end quote, by many. This belief, combined with high levels of political and economic uncertainty, was seen as a negative risk backdrop. As a result, investors were either short or neutral equities. No one was positioned for a run to all-time highs, which is why the sudden shift in Fed pricing towards 50 BPS caused such a sharp squeeze higher. Heading into Wednesday's FOMC, short positioning appears to be a lot cleaner, which suggests a 25 BPS cut, now seen as a disappointing outcome. Could see a fresh round of short selling. On the flip side, a continued rally on a 50 BPS cut should force investors to chase, as overall equity positioning remains relatively low. U.S. equity manager positioning is at -1 standard deviation below average. UBS prime brokerage net exposure is at the 45th percentile versus 5-year systematic positioning is still low post the early August sell-off, and retail investors have been net for sale over the past month. Given this setup, both FOMC outcomes argue for large market moves, which is currently not priced in by SPX options, only implying a 1.05% move. So, what does that tell you? It tells you what I told you earlier this week and earlier today. You can put on a exposure trade for a capture between now and November 15th. That would be a bear ratio spread, and then look for lows to buy with some aggressiveness, especially if we get the 50 BPS cut, right? You grab some 0 dates or some 1 dates or even some weekly cheap ass calls for a run higher while you're hedged for a print lower if we get the blood from a 0 or 25 BPS cut. Also, from a DB survey that we hit this morning, we have, how much do you think the Fed will cut rates today? From our flash poll on the day of the meeting with nearly 1,400 respondents from all around the financial market world to a broader global financial audience, 50 BPS would be more of a shock than 25 BPS. The opposite to what is suggested by the Fed funds future contracts. Now, this is in direct opposition to what you're being told here, to expect doom and gloom on 25 basis points or 0. I'm going to post this for you right now. In truth, the shock could likely be to the upside. Banks do not want to see this market get crazy to the upside. I want you to know that. What happens is you force buying. You force buying by dealers. You force buying by COTs. You force buying by hedge funds. You force buying by dealers, right? Everybody, CTAs, has to jump on board and chase price. Also of note, I posted this inside the Discord. Also of note here, if you get 50 BPS today, it'll be required that Jerome Powell reassures the market that they have not over-tightened and that what they are trying to do is arrest the velocity of some of the data that is coming out right now. If you look at the GDP rate of growth, if you look at there's all kinds of like industrial production, there's a bunch of different data points out there that need to be arrested and over the coming 3 to 6 months to flatten these data curves over time. Inflation, we don't need to deal with it right now. We can actually let inflation rage for a little bit. Unemployment, we also want to slow that down, right? We do not want the velocity of unemployment to remain into August of next summer. The path right now of unemployment, believe it or not, is to be on fire by July. And so we do need to work, or they need to focus, and the Treasury Department needs to focus on this stuff. Let me show you another little quick point here. This is coming from Wolf Street. I want to show you something important here. This is the Treasury Department runoff. I want to show you one quick thing here. Hold on, where do I got that data point? I would also expect the Treasury, Yellen the felon, as she's known to a lot of you. Let me show you this right here. And this is another one of those data points. This is the Fed's total assets from crisis to crisis, raging inflation to QT. What's important about this for you to see is we don't ever like to see that velocity to the downside here in the runoff, right? See where we are right now, right? We've got raging inflation above. The Fed's done a great job at this point. They've done fantastic. They did a great job turning the hotness of the market over and down, but we're coming into this point even with the Treasury Department where you don't want to see velocity to the downside in the runoff. Whenever we get that velocity, see how we reined it in right here? See that reining in right now in the runoff? We didn't get the velocity to the downside. That's 2012, by the way. You see that 2012? I use that as a reference point for you, right? You get an announcement that the runoff is over. You arrest that runoff before it gets steep, right? That's what the Fed's trying to do, is to cut some of this stuff off. The Treasury Department trying to cut some of this stuff off. You can see when we do this, we rage to the downside. The repo market has a blowout. We can also see financial crisis. If you look farther back in time, the same thing took place. And all of these trends, we're trying to stay kind of flat in here, arresting that upside move. Whew. So today, you're going to need the Fed. If you get 50 BPS, right, you're going to need the Fed out there massaging you. You're going to need the Treasury Department massaging you. They should come full out today and over the next coming weeks and say to you, hey, look, we're not there yet. We have not overshot. I'm going to show you my charts, right? They're going to break out their charts for you. I'm telling you, that's what they're going to do. They're going to come out for the next 2-3 weeks, and they're going to be like, see my chart over here? It's a 10-year, 20-year chart. And they're going to say, we haven't overshot anything yet. We just know that we had this massive rate or velocity in data. We arrested it, brought it back down, and now we want to do the same thing and bring everything back in line. So just think about that and how the Fed talks today, the Fed speak. will be important. And the Treasury speak over the next coming weeks will be important. And also note that due to the fact that we have not overshot yet, be patient. 1 month of data. Well, number one, good data from this point forward, from today forward, right? Good data will be good data. Bad data will be bad data. And 1 month of data does not make a trend. Wolf Richter, find that guy on the internet. Guy is amazing. Guy is fantastic. 1 month of data does not make a trend. 3 months of data starts a trend. 6 months of data, start getting happier, start getting scared. And if you look at an OPEX cycle for September, October, right? If you do look at that trend, I think Volatility Wiz, Scott, right? If you guys follow Scott, Volatility Wiz, he put out an OPEX chart, right? A prior OPEX chart. That kind of matches up with 2012, right? When we had QE3. If you look towards that November meeting, we will have enough data to know if the market's going to moon and crank higher, or if we're looking at a recession. And the market will begin to get nasty into 2025, January through March. Inflation will rage in July and August, or June and July, with cycle lows on inflation. And the Fed will be chasing with major cuts in QE Infinity 5 or 6, whatever, which one you want to call it for right now. I'm also going to read one more thing to you here. Read one more thing for you at this moment here. Goldman Sachs. Josh Scherfen, reminder, this is not from GS Research. This is a GS trader, right? The GS maintains a 25 basis point cut today. Personally thinks that that September will be more important than the absolute size of the cut. How many, what is terminal, what the growth projections are, etc. How do ATF sectors trade on the day of the initial cut? Look at the moves in gold proxies for non-recessionary cut. GDX plus 4.8%, GDXJ plus 5.6%. How do equities and bonds trade post-start of a cutting cycle? No recession, stock ramp, no recessions, dollar strengthens. His thoughts on this is that they go 50 BPS today. His thoughts are we go 50 BPS and we knee-jerk rally 60 to 70 handles within striking distance to all-time highs, and then it is sold and finishing flat or down small on the day. The street gets very long gamma on a rally. Futures supply, they go 25. If they go 25, we sell off 70 handles, which ultimately gets bought. I don't necessarily see SPX out-realizing the one-day straddle outside of a 1.1% move, despite the wide bid offer between 25 and 50. I think the likely reset in implied volatility will offer an excellent opportunity to buy both Q3 earnings, convexity, and election convexity. Has anyone else noticed that the October-November VIX futures spread is basically zero? The GS trading desk thinks you can see 0.9, 1.1 vol reduction in October and November implieds after the Powell speech today. I'll post that for you in the Discord as well. Let me see here. Bam, save that. So the market, the banks, the traders, they all want to rein this market in. And I did make a post this morning on FinTwit. I made a post for you this morning on FinTwit, and I'll read to you what I posted here. Early this morning, even before this came out, it's kind of funny. You write this stuff, and then this stuff gets released. I wrote this morning, I doubt this matters, but expected move today is relatively small. I think it was 1.2% or so as of yesterday. Looks like it was 1.5 as of this morning. With a potential policy shift, you would think a much larger move would be expected. It piqued the cobwebs in my outdated Rolodex. That's my brain, right? And I faintly recall delayed reactions the following day in similar reactions. let's look at one of those as an example right now. Let's take a peek at one. A delayed reaction to the market. To a Fed policy change. I'll give you all an example right now of what I'm talking about here. Right in here. Very similar, right? This is 2012 SPX. And I want to show you this in particular. This is September 13th, 2012. This is September 13th, 2012. I'm going to remove that to the side for you and move this one to the side. And I want to show you how we had a 0.31% move on this date. This was a Fed policy shift. Downside move, upside move, down into the close. Not really a big day, right? Small day. And it's a nothing burger, right? Big nothing burger. This is Thursday. This is the Thursday of the Fed rate policy shift QE3. And you're left going, scratching your head, right? On that Thursday, you're going, wait a minute, we just turned on the money printer. Why is the market not going higher? And so you close your laptops, you go to bed, you're not positioned for Friday. You're like, oh God, we got up. Well, this actually, OPEX took place the next week. But you go to bed and you're like, damn this market, I didn't get paid, I got 0 dates. And then what took place on Friday? Anybody want to tell me? What happened on Friday? Oh, what the hell is that? This is Friday at 1:30 in the afternoon. Oh, you go to bed on Thursday, right? You wake up here on Friday, up 2.67%. Can you imagine being here today? Can you imagine being here today? Right? It's today. And you see some kind of nonsense goofiness where we're doing this in here. Coming to the end of the day. You wake up tomorrow and we're up up here. And they're like, this nonsense down here. You're like, oh, shit, Cappy. I didn't get my downside move. I didn't get my upside move. You're all crying. You go into the close today, and then you wake up tomorrow morning and you see this. And they just ram it up your ass. By 1:30, the trade is dead. You're all trying to get long, and they're selling into you on Friday close. You're dodging, they're weaving. You're on zero dates. If you had a low today, it'd probably be like 3-4% upside moving Friday. No one's positioned for it. Dealers are like, yeah, we hit the targets. Options traders missed the entire move. They rein the market back in for OPEX at the end of month. They rein the market back in for the election volatility. You're dodging, they're weaving, they're dodging, then you're weaving. You're just like wrong side every moment, every move. Oh boy, that would be hilarious. Do you want like financial comedy? You're like slightly down in the day. All the sellers are just chasing the hole. They're all like Bud from Wall Street. All the bulls are like, oh no, I'm sitting on the sidelines. You wake up tomorrow. They torch every seller. None of the bulls are long. Bulls jump in late morning for the upside to catch it all. They think it's going to go up into the end of the day. They end up selling right into these late FOMO buyers. It's a beautiful thing. It's like, mwah. Dealers are like, honey, we bought the pool for the summer. We did it all great. We bought the we bought the new Rolls Royce. What do you want for winter? Let's buy a chalet in Switzerland. This is why I would say trade the extremes here. Stay on the edge. If you're not already positioned, stay on the edges. They're gonna ragdoll you if you're not in the. If you're in the middle, you're gonna get ragdolled. I love it. I love what. I mean, shouldn't say that, of course, but the ragdolling is always fun to see. Q's making its way lower. Q's looking like it wants to trade 468. That's your bottom right-hand screen. I'll show you guys this down here. Bottom right, your bottom, or not right, or sorry, not right-hand. Bottom screeners down below that are going to be cycling here. And we're going to switch to a format of, as we get closer to the decision, where I'll have different screeners up for you. I'm going to have Jerome Powell video feed. I'm going to have, I believe, SPX, TNX, and Dixie, or SPY or ES, TNX and Dixie up on the screen for you during the presser. This is Q's down below. This is IWM. Dow Jones. Dude, I got Dow Jones like. I got some blood coming Dow Jones's way. VIX 9-day on the move right now. If you don't know about VIX 9-day, it's like SPX divided by the VIX. If you don't have it, VIX 9-day is kick ass. If you like to trade volatility or how the market moves on an intraday, intra-week basis, volatility's been bought. Down at the buy zone, it's been cranking. If you're a vol buyer, congratulations. You're making some good money here. Dixie. Take a look at Dixie here. You want to see if the Dix can trade 99.60. Move that over for you right there. TNX on the move higher. TNX has a date with a daily cross of the monthly trigger at 3.77. TLT, hopefully we can get a little bit more downside action for a dip buy. I'm going to read some more notes to you at this moment. Mester saying there is a good case for a series of 25 BPS rate cuts. McGilligot coming out this morning. I'm going to post this in the Discord for you if you like our boy Charlie McGilligot. I've got one for you, a note. I like McGilligot, kick-ass trader. Nomura's McGilligot on rate cut implications. Mission accomplished. With no bullets fired, unwinding and monetizing dovish rate bets stirs front-end longs and upside steepeners USD shorts downside, which self-fulfilled the Fed rate cut event before it ever happened. So now it almost doesn't even matter whether Powell goes 50 BPS or 25 BPS later today. To those who've already taken profit into the insanity of the past week. Exactly. We've traded this whole event, and it's been nothing but bank. Mission accomplished 2.0, with mortgage refi data just released, showing a wild 24% surge week over week to the highest level since April 2022. While mortgage applications jumped 14% week over week, as the market's extremely dovish pre-positioning into the commencement of the easing cycle does the soft landing work of the Federal Reserve for them. And mind you, this is already coming after a string of positive data surprises in recent days, from retail sales to capacity utilization and industrial production. Remember, industrial production, one report does not make a trend. If you look at the industrial production month over month and year over year, it looks like dog shit. Why? Because companies are not instigating new hiring, new manufacturing, new research until we get actual rate cuts. On top of said economically virtuous knock-on effects being released within the housing market via the massive easing in financial conditions over the past few months, potentially then to helping to unlock massive home equity along the way in further economically stimulative fashion, which of course then is sowing the seeds for future rate volatility and reflation into a world that is easing, stimulating by and large, with fiscal dominance now the prevailing regime in the U.S. economy and politics. So that is your Beartown Charles McGilligot giving you the counter argument to rate cuts today. That invariably the Fed has already done what was needed to do to shape the data out there in the short term. I love McGilligot. I do. Miguel Gott's like, I'm max short right now. I got the whole firm riding short into the close today. IWM. It's a good point. Ryan said something about IWM making bigger moves. A few things here. If we do change policy, you should already be aware that the outperformer should be small caps. Same thing if we don't get a change in policy, they should be blooding the worst as well, right? Your largest outperform should be IWM. Your middle of the road perform should be S&P 500, and your underperform would be NDX. That doesn't mean NDX burns. It just means that NDX does not outperform. They'll all pretty much be in line, but notice how sometimes tech will outperform S&P. Same situation with IWM. All right, that's all I got for you right now. It's now 11:41. I'm going to take a quick break. I'm going to I'm going to turn on the news squawker from London, from the news squawk desk. I'm going to also bring up the financial juice squawker again for you. And I'm going to take a quick break here. So do your thing, chat in the Discord, chat on Twitch and YouTube. And I'll be back with you guys in about 15 or 20 minutes for the 12 o'clock hour. Just note that we are at the Euro close, 11:41. We also have, so we got the Euro close, we've got the golden nugget, we've got the 115, 130 nugget as well. So if you are a bear out there and you're looking for that golden nugget to the downside, remember that the pivot point is right in here. Looking for some downside targets, hopefully. A little bit of doom. I will do Apple for you, just not at the moment, but I will do Apple for you. I got a list of tickers I got to do for people. I just can't do it on Fed Day, but I will do Apple for you. And I'll be back here shortly with me. Change this book map up for you here a little bit. Whoa, what's that down there? No, look at that bad boy down there. Ooh, yeah, rub that thing. Oh, yeah. Oh, get that blue bar. Oh, yeah, make it red and yellow. Oh, yeah, get down there. Thanks, Chris. Appreciate it, brother. Oh, let's get some blood in the market. If you look at
Kroger, that's
it's a good question, Surfx.
Says Kroger workers in Virginia ratify a new contract.
If you look at like Mag 7 has pretty much carried this market. If you were to look at IWM, right?
It takes effect rather retroactively on August 4th this year and expires on July 31st, 2027.
The rate hike cycle has basically reined in small caps and mid caps, right? The rest of tech minus Mag 7 is sideways or down right now. The same goes for the greater S&P 500. Jerome has basically sent this market sideways or down and then sideways into where we are at this moment. We also know that they do sometimes use specific tickers to prop the market up, right? Like the old 3 or 4 legs in the stool argument, like they did into 2021, and the indexes, right? They kind of prop the indexes up in 21 with Mag 7 or Fangman plus T type stocks before the drop in 2022. So if you look at the greater market as a whole, it hasn't moved too much, has it? They've pretty much done their job. All right, I'll be back with you guys in just a minute.
just want to be aware of in terms of Fed pricing. Currently now at 55% for a 50 basis point rate cut later tonight. That has come off the highs we saw earlier this session that were rather at 61%. And just seeing Boeing news here, that's ticker BA, its CEO, to say that they are initiating temporary furloughs over the coming days that will impact a large number of US-based executive managers and employees. And update from China. The Chinese government on Wednesday pushed back on a US probe of whether China is helping its neighbor Russia dodge a US ban on Russian uranium imports, saying Beijing has always opposed illegal unilateral sanctions. Reuters reported exclusively on Tuesday that the US Department of Energy and other relevant agencies are closely tracking the imports from China to ensure the proper implementation of the ban on Russian enriched uranium that President Joe Biden signed in May. I'm just going to give a quick little market update. In the last sort of half an hour or so, I have seen some risk off trade. That does coincide with the dollar strengthening. It's currently just off session highs right now with the index at 193. In terms of equity futures, they are in the red now with the S&P down about 20 basis points. NASI is underperforming, down about 35. And crude now inches back into the red, currently down about 60 cents per barrel. And in terms of cable, that has now gone back below the 132 handle. of note for Boeing, it does say that those furloughs will affect tens of thousands of Boeing employees. Of note for Cisco, now seeing some comments. That's SYY. Does say Q1 industry traffic has softened a bit versus the prior quarter. These are comments from the CEO, and they say traffic in Q4 was down roughly 3% at restaurants, and for the current quarter, the global industry traffic has softened a bit. Just an update from Libya. Does aim to double its natural gas production to 4 billion cubic feet over the next 4 to 5 years. That's according to the Libya oil and gas minister.
senior Hamas official says the Israeli government is responsible for the repercussions of this continuous attack on Lebanon.
All right. Dudes, I just took a look at the this is the first chance I've had to look at the this is the first chance I've had to look at the zero dates for today. That's ridiculous. They're like, pay $2 for a 30 delta zero date. Like, get the F out of here. But we were buying calls yesterday at 3. Like yesterday at like 3. 45 or so, I think. And I'm just like looking at this and I'm like, you can't win. This whole day is like set up to take your money and run. I mean, I'm a cheap guy. It's like, you want me to pay how much for 100 pack? 30 delta zero dates? Oh, get out of here. We just took $18,000 from you. We only went down like five handle, or we went down like one handle. We went back up, but we didn't give you back the $18,000. I apologize. We're buying a chalet in Switzerland this Christmas. Man, woo!
And on the Egypt's call footing here, senior Hamas officials says the Israeli government is responsible for the repercussions of this continuous attack on Lebanon.
My God. Yes, you can wreck an account today just on no movement. Like, literally. Like, I'm looking at the options chain right now. I'm like, if we didn't go anywhere, it's like, you're going to blow out, like, everybody. That options chain is like, it's just begging for us to go nowhere today.
Of note here for Google, took a GOOGL. According to Reuters sources, Alphabet's Google did offer to sell advertising marketplace to address competition concerns about its ad tech practices, and Google did make the offer to European publishers, but rejected it as sufficient. That's according to Reuters, citing sources. Note therefore, Alphabet took a GOOGL.
Dealers are like, pay that man his money. We're like, how much do we pay him, boss? He picked the right direction. 50-50 chance. He paid $2 for 30 delta zero date. Give him 5 pennies. Pay that man. You're just like, I just risked $2 for 5 cents. You better take it before we take it all away from you. Oh yeah, zero dates. It almost forces you to trade the extremes. If you're on the zero date trade today, they're juiced. Oof. Juicy zero dates. If you guys watch chains, man, you might want to go a little bit farther out in time here. A couple weeks, month. Like, stay away from today's option chain. It is a hot mess. Hot mess. This is a 4-hour order block right here, just so you know. You're going to find buyers in here. You can see they're already down here buying. Man. That SPY in particular options chain, that shit is built to take all your money today. Run away from it. No matter direction. That thing is primed to take all your money. Spreads, farther out dates, anything that's not near that today's expiry. Yeah, SPXL is nice. I like SPXL. SPXL, someone in the Discord is saying that SPXL is a little bit better to be trading today. The SPY options chain is just primed. It's primed to take all your money. It's like dangerous. It's not that you can't win. It's that the cost to play is high, right? I mean, they got the whole thing juiced. They got the put side juiced. They got the call side juiced. Yeah, repricing. And it's the kind of juice too. Let me give you a warning out there too. From this point forward, even if we have targets to the upside or downside, they are going to fail the initial targets, and they will reprice the chain, then break through, then reprice the chain again like a pullback. So not only will you get you'll get the price that you want. Let's say there's an example here, okay? I'll give you guys an example here. Unless there's a market shock, let's say you directionally pick the right direction. Let's just pretend we're blasting up here. They will literally boom, stop you there, reprice. This will be after 2 p.m. So let's go over here. We'll give an example. Timberlake grinding. You get the down move. You would get a pullback here, reprice. Pullback here, reprice, or even down here. And even if you're even when you're moving higher, every time you hit resistance, in the background you're going to get a repricing event. So if you are taking on any directional, let's say you're taking on some directional zero dates today, they won't necessarily reprice out calls or puts farther out in time as aggressively as zero dates, but zero dates in particular have some sell stops. Not necessarily in the downside or upside if you're bearish. So let's say you're bullish or bearish, doesn't really matter. But if you're bullish, right, and let's say they blood you down, you're probably, before we ever get there, they blood you down, you're probably going to be pretty good to capture the upside move still. But upside sell stops bullish, or downside sell stops if you're bearish on the option chain for SPY zero date today would be wise. And I would also keep your targets hemmed in, closer to in the money, and have upside sell stops. So if you make that choice, I'm going to buy a $2 30-day or 30 delta call or something like that, just make sure that you have an upside sell stop. All I'm here for is the 50%, 100%. Don't have hindsight vision. Don't be I could have made $10. The probability and statistics of you not ever getting that $10 is much higher than us going to $10. So even if we hit it, it's just hindsight trading. Just be I want to make this much money.
News behind the move, but of course we'll keep a lookout.
Put your sell stop in, take the money and run, walk away. Hey, had a great day. Woo! I beat the S&P 500 today. Over the year, right, in one day. Because what can happen is you can be directionally right and watch your options burn as you are directionally right. This option chain is really juiced. It's really juiced. Yeah, they don't care either. They're just we're getting paid regardless. Someone's going to lose all their money today. There are way better days to trade, too. Not only way better days to trade, Miguel Agat made a really good point this morning. The trading has been outstanding. The bloodbath, the big second leg down we had, the trade all the way up into Labor Day was unreal. The sell down and the coming back from Labor Day was great. We had some hedges on the market. Then the dip buy and the run up into this moment was phenomenal. And he mentioned it this morning, the trade is dead. Not only is that, he didn't mention this part, but not only is the trade dead, it's just like an ER, right? You're either selling down into an ER, and you get out and let the FOMOers gamble, or you're riding up into an ER and you're making all this money and you just step away. You don't even need to deal with the volatility and the FOMO-ness of the event. But there's another aspect to that trade that he didn't mention this morning. So I'll read to you again what he said. quote, mission accomplished, end quote. With no bullets fired, unwinding and monetizing dovish rate bets. So it doesn't really matter whether Powell goes 50 or 25 to those who have already taken profit into the insanity of the past week, right? There's one more caveat he didn't mention, and that is that as the week wrapped up into this moment, the banks have been on public, on Bloomberg and CNBC and on FinTwit and hedge funds. They've been disseminating regurgitation to you to repeat, clouding no cuts, 25 cuts, 50, even the politics of the 75 cut bullshit. Is all, like someone said in the Discord last night, the call for 75 BPS from the politicians is so to like, so if you only get 50, the politicians can say, see, they didn't do what I wanted them to do, so they're not doing our bidding.
You do know that Apple pulled,
but they've clouded it so quickly the last few 5 sessions or so,
with the M4 chip after numerous owners
while being in the trade.
With no way
and the intent behind this is to rein the market in today. That's the only intent. So it's like I've taken my trade, I took my money and ran. I got the market hedged. I got some exposure to the upside and I'm hedged. I don't really care what happens today. And I would like nothing more than for the market to burn for me to buy a dip. Like, so the trade is kind of done. Invariably, the trade is done. You got a chance to buy the dip. You got a chance to hedge. And dealers are here to sweep up and vacuum the FOMO gang that's here, which is kind of fascinating, right? And you have the potential of getting a greater move later and also trading the OPEX and Vixpiration and seasonal weakness. Then like you come back in November for the election volatility and you just wrap it all up with a nice bow and drag out Art Cashin. And he tells you everything is fine. Meanwhile, you got everybody like trying to sell the market down. Bulls aren't buying the dip. It's like this nonstop repetitive soap opera. And you kind of have to be there before it happens and trust that it's actually happening, because they don't come and tell you this until it's done, right? I say that a lot on this show, right? We're like, yeah, in about a week you're going to hear this, and about a week from then you're going to hear that, and then a month from now you're going to hear this. And I know that we're not there right now. We're pretty programmed as retailers to get the news after, not before, right? They come out a week later and say, oh yeah, hedge funds were long. But of course, when you're trying to get long, there's nobody saying the hedge funds are long, so people are like, they're not long, bro. They just told me they were short like yesterday, right? But that was old news from like 2 weeks ago, right? This is kind of fascinating. And now they get the options market juiced to all hell. Nice little dip buy in the 4-hour order block. 12:33 now, coming into the 1 o'clock. 1:15. Vol Control, Put Mafia Gang. Having got a nice little rip and dip. Nice little rip and dip down into the thingy. No bloodbath down below. I was looking to get some 0 dates down here. I wanted to get some 0 dates down here. No joy. I'm trying to trade the extremes on 0 dates as of right now. I'm not willing to buy dips on $2 or even $4 in the money calls.
CMCS.
I can wait.
And charge to CHTR.
Wealth preservation, A number 1.
In recent trade, but we'll let you know, of course, if anything comes through. Of note for T-Mobile, that's TMUS, does expect to add 12 million 5G broadband customers by 2028.
No cut, we bleed. I'm in the other camp of that. Like, I'm in the camp that the Fed and the Treasury departments are elephants. Anything they do takes time to impact the economy, the market. They're slow. I think if you look at it, like if you look over like week over week data, it's not enough data. The Fed should change their path now, in my view, because their impact isn't going to. Their impact won't take effect for 3 months and outwards of 6 months.
Customers by 2020.
They're not quite behind the curve, but they are close to being behind the curve. So if you were to wait like November, January, March, you really start becoming not just majorly behind the curve, but there's a real risk of recession and real doom. Like there's some real danger ahead. I'm open to rate increases too.
Government does
in like January, March. If
hold.
trend is arrested, I'd be open to rate hikes, believe it or not. But they have to telegraph that stuff. They would have to be able to like explain it all to you. I'm not in the camp that like 1 month of reports is enough. The same thing goes for when we started the rate hike cycle, right? We started pricing that in. It took a few months, right? It took 6 months, then it took nine months, and the market stabilized. The same thing is here. Like McElligott's argument is correct in the short term, but risks danger in the long term. I would think that if you didn't get a rate cut today, that you would be, or I would expect that when we get into November, in December, that you would see the market choose a direction outside of the quarterly expectations or what the banks want us to do. Like once we get into like the end of Q3, you would see a fundamental change in positioning in the market to the downside. If the Fed doesn't change their rate path, I would be aggressively bearish into next year, regardless of outcome, regardless if they cut rates in Q4, regardless of whatever they're doing. I would just say no. I don't trust them. They have over tightened at that point. I don't even think that them changing rate path or even just policy path right now, maybe not rate path, but just policy path, I'm not even sure they can arrest it. It's still wait and see. Even with like a policy change today, you would most definitely be watching if it works. That's like how close we are. You could technically change policy today to a dovish stance, and you would still want to be cautious that it's working in the next 3 months, about 3 months and 6 months. Because I don't even trust that they haven't over tightened at this point because of the aggressiveness of the tightening we did and the time frame that we did. We have a real chance of overshooting. So no rate cut today. I would say that not only is the Fed playing with fire, but they have over tightened, and we will pay that price down the road. A high percentage chance of that, like I would say 65 to 70% chance
T-Mobile, it does fall
that they fail at that point.
$59 billion in EBITDA next year.
And you'll see that call come out in public if they don't change their, not necessarily rates, but policy. We're all focused on policy, or we're all focused on rate changes today. Policy change is what matters. Whatever that policy change is, if it's partially the Treasury, partially the Fed. But if we're all here focused on rates. Policy change is the key. And if they don't change their policy path for for at least the next 3 to 6 months, we're going to be looking at that. Remember that outlook we gave at the beginning of the year, where we were like, expect 2025 to be pretty bad for the stock market. That's gonna slam some final nails in that coffin for 2025 to be wrap it up and get out. I would be wrapping it up and getting out of all your debt and all that stuff. Or at least I will be. I'm almost there, so I'm already I actually started this process in the spring because I don't trust the Fed at all. I don't trust the Treasury Department. I think that they do over tighten, even though they say they're not going to this time. And I got to give respect to Jerome. The or Jerome saying that they're not a I forget what the terminology they use, but where the Fed is not I forget the term that they use, but basically where the Fed's not trying to fuck you. They're going to tell you the truth before it happens now. That's not confrontational. I forget what the terminology they use for it, but at any rate, I'm impressed with what the Fed has done. I'm actually impressed with what the Fed did in COVID. I'm impressed with what the Fed did after COVID. And now it's if we overshoot, is the big question for me. Reining everything, like they had to rein it, like they reined in the bottom, they reined in the top, and now we're trying to bring everything back in line. So I got to give them tons of respect for that. I'm shocked. I didn't expect them to be successful. So now we're at that next inflection point, in my view, the start of that inflection point, and I don't want them to over tighten. But I would say this: if they do change their policy path and they're able to rein in all of the velocity that's going around and on all these different data points, I'm definitely open to raising rates again. 100%. I'm game on for higher rates, but I'm really afraid of that. I'm really afraid of some of that velocity that's out there. I'm like, man, that we overshoot that shit. They'll be chasing that shit for 6 months to a year. Market will be on fucking fire, and there'll be nothing they can do. They will be so far behind the curve that, and some people like that. I realize that too. I realize there are participants that want to see a 30% down move so they can get long again, right? I get it, myself included. My larger macro fear would be that you have that 30% or 50%, whatever it's going to be, not turn into a multi-year or decade-long quagmire. That's my fear. I don't really care about the end of a bull market. That's normal. I don't really care about doom and gloom in 25, 6, or 7. My biggest fear is it a lost decade? That would kind of suck for a lot of people. Not me particularly, but I know that it would suck for like anyone that's older will tell you that
turn up to $50 billion.
You go through a decade of no returns, it blows. It really does. Stagnation, stagflation, a long recessionary period. Those times are rough. They really are. Not for some people, they're really brutal. And it's not just people that have already made it. It's brutal for people trying to get something started as well. I think it would be good for like a 10-year-old. You're like 10, 12 years old, you'd be great. Maybe not that young. 15? Like 15 years old, you'd probably like that. All the 15-year-olds out there would be very happy. The rest of you out there that are adults, it's not conducive to most of you. Most of you think that you'd be better off, but you probably wouldn't. kind of like some of you out there saying, protect the billionaire class. You think that's good, but it's not. You know, it always reminds me of when I go to like jury duty. I'm always like, man, that guy right there is like they're prosecuting this guy right now. He looks like I bet you before he got that DWI, he was like, those guys should be in jail. And now he's begging for mercy for himself. I ain't no criminal. I'm like, oh, bro, come on. You want some reform now, huh? And just you? You don't want reform on everybody else, though. Would the bottom fall out if we got a rate hike today? Yeah, of course. If you got a rate hike today, you'd see the bottom fall out. Would it be okay for the market in the long term? I don't think so at this point. I think we're past that point at this point. Like rate hikes are maintaining. Like I used to tell you guys that as long as we're raising rates, and even if we're in a pause, but we're like raising and pausing, it's a bull's best friend. It really is. Once that market stabilizes, we trade in sideways. It's bullish for bullish, believe it or not. But when we're coming into this, when we come into where we are right now, that begins to change. From now into March, for where everything is, there's real danger for bulls with higher rates and pausing. There really is. There's danger to you. So I got to make that known too. Currently, at least.
From TF Security.
Currently, at least, there's danger to you.
That Apple employees can already purchase the iPhone 16 with their employee discount.
And it's not now. It's down the road. It's July, August, June, July, August.
For the new iPhone models before being able to buy.
And there's nothing the Fed can do once we get to like March. The Fed's not going to. Do you guys remember? And COVID's a recent one, right? Yeah, COVID. COVID's probably the last time we had QE, right? So, you guys remember when they went on 60 Minutes and they announced infinite QE? We made another leg lower, didn't we? We made a giant leg lower. And why? It takes time for that stuff to, well, there's two reasons. One, because no one's positioned for it. And the second reason would be because it takes time does that make a change or impact, or there's other policies, politics, and free money for people. Universal basic income, I guess. PP, was it PPE? No, PPE is what you I'm calling it PPE. But the loans they gave everybody and all that kind of stuff. Like it's like time for that to see if it has an effect or not, and on the economy, and is the economy going to be okay? So that all holds true now too, with wrapping up QT. Think about that too. Think about that as like a. Think about that as a. As we come into these inflection points, that there's time at these inflection points. Like time matters in these inflection points. 3 months, 6 months, and the impacts that happen. And not acting early enough has impacts as well down the road. Squeezing high now, trading 563.23. Got a 4 trigger cluster. We got a target to the upside right here. Those going to be trying to trade this right here. Price is above the 1 minute trigger. Price is also above the hourly trigger.
Of note for Marriott International, that's ticker MAR. CEO does say the company is watching if a slowdown in spending from lower income travelers was just a blip.
You got a little bit more volatility, like right here, right here. A little more grinding going on in here. Pay close attention if this green bar gets us over that white line or not. Thanks, China Will Scam. Appreciate that. Also note that we have I try not to talk too much about this stuff on public, but we have a trading community. TradeTheTrigger.com is the website. We have an active Discord where we trade futures, Globex, stock trading, options trading, buying and selling options. We got guys in there that trade currencies. We trade commodities, crypto, you name it. We trade it. Active community that trades 24 hours a day. It's a very welcoming community, no matter what your experience level is. We have mentors and moderators and admins that actively teach and also show their trades before and after.
Just an update on geopolitics. Israeli army chief says
there's some real gangsters in there. We have some admins that are professionals in real life, unpaid, of course, if you're wondering, because there would be an issue with FINRA and stuff like that. So we've got some people in there that are actual pros. We have some past pros that are moderators, actual professionals that are moderators and administrators as well. We got a quant in there too. I think the entry is like $18. We do a bunch of stuff for pro traders. Give you access to the velocity for I think up to 12 tickers, updated twice a day on a static chart. We'll give you the tools as a pro trader that you can use however you want. We do Elliott wave expectations across the entire market. We do Elliott wave on currencies, pair trades, crypto, tech, Mag 7. Anything that's coming in or out of seasonality, metals, commodities, you name it. Rates, volatility, all that kind of stuff. If you're looking to join a community of traders, give us a shot. The GME blast down right now. Also note on this bottom chart right here, just keep your eyes open that the first resistance point is at 56.50 on SPX. So if you're looking for a place to take the money and run, first local resistance, 56.50 on SPX. The VIX 9-day rolling down to retest its hourly trigger. SPY squeezing higher now into the pivot point at 56. 3.548. You want to be paying very close attention if we go above or if we reject. If we go above, we should continue higher and trade that gamma resistance above. That's again at 56.50. That's a good sign right there. That's bullish. Get rid of that now. XLU, I'll add it to, I'll add XLU. I'll give you guys a 4-hour expectation on XLU inside of the market chat channel. I'll give you expectations on it tonight. I'll give you a count with triggers and velo. Thank you for saying that, Christopher. Adversarial was the term I was looking for. The Fed is no longer adversarial. SPY now squeezing higher with a high tick of 563.69. Down below, I'm going to move this, change this SPX chart to
stages. At every stage, the price paid by Hezbollah should be high.
I want to show you something really quick here if I can. Bottom right-hand side, or I want to show you 2 key points right here. So just note this note on SPX 56.4278. That's the prior high right here if you can't see it. Right here. You may get a quick pullback. Your resistance is higher. It's at 56.50. We should get up there and squeeze all the way up and get as close as we possibly can to that. Just note this prior resistance point in here. You guys can see all that. Hold on a second. I got to do something here. I got to undo all this stuff here. Check this really quick, too. Sorry about that. If I turn it off on a different screener, then it turns off all the chat over here. Watch that pullback. That's on that prior high back here. I'll just draw it in for you guys right there so you can see it. This is local resistance on SPX Gamma. Watch out for a liquidation break to the downside. Whoa.
Of note for Mercado Libre, that's ticker MELI. It just signed a deal with JP Morgan for $250 million.
Daycare, I think it should be free.
On Mercado Pago to expand their credit profile in Mexico. That's according to Mercado Libre.
I think daycare should be free. No, we need more people born, right? We already know that. Can you guys do it? Can you guys on chat just say something really quick? Thank you. Just want to make sure the chat was still on. I think daycare should be free. I do. I think it should be free because it would encourage having babies. And we kind of need some of that in this country, right? We need to have more babies. Thanks for just text or just chat in the chat. Just type balls. Doom. Type in doom. Yeah, new high of day in SPY. No new high of day yet on SPX. I'm not looking at ES right now. Q's recovering on a smaller time frame currently. IWM tracking sideways still, right over there. DIA not making that downside move. I've got DIA going down, but I could be wrong on that DIA call. Well, I've got them going up and then down. They still haven't made their upside move yet. VIX getting rolled down to the hourly trigger. TNX has hit their first target. Market crash today. The fascinating part right now, if you look at similar time periods between last week and mid-November, with like truly like market shaking events, like contested elections, policy change, velocity, any outside move is still reined in. We have examples of it. Like any like doom to the downside, any outside upside moves, they all still get reined back into range. In every example that I could find, it didn't matter. I did see Tom Lee said to expect a did he say expect a multi-week rally? I think he'll be right one way or another. If we get 50 BPS, he'll either be right now or he'll be right by the end of the year. Is Jimmy Berry out there today? Is he watching the show today? I'd like to get his take on rate cuts today if he's here. Jimmy Berry, if you're out there. I saw something yesterday. I saw something. I didn't read it or anything. I just saw something winky, like a blurb. He was saying we should get I don't know, like some kind of a major rally after today. Pee in a toilet instead of a bucket. I did go potty earlier. Though I didn't work out today. I'm a little sore today. I was pretty active last weekend. Then I worked out Monday, Tuesday. And that was today, Wednesday. I'm feeling so. I woke up this morning. I was worn out. I was really worn out this morning. I slept a lot last night, and this morning I wasn't feeling it. I think I've pretty much been physically active for. Usually I get some downtime. I haven't gotten any downtime. I've been running pretty hard physically too. It's like catching up to me. I need like a 24-hour period of rest. Actually, to be honest with you, like I was talking to Joe today. When I took that break, I was on the phone with Joe, and I was like, man, we knew, like, we went into Labor Day weekend to rest up, and we knew that this month would get busy. And I feel like this is the first leg of that busy, and we just finished it today. Like when I was going on vacation for Labor Day, I was like, we're gonna come back, and it's gonna be zigging and zagging. And I feel like we've hit the first milestone, like today specifically. We're at the finish line today for the first leg. And then we have like this whole other leg. We have 2 mini legs. We got a mini leg tomorrow for OPEX, right? We have expiration tomorrow. And then we've got OPEX. So we got like a mini leg for expiration tomorrow. We got the mini leg for OPEX on Friday. Then we have like a middle leg for end of month. That's like a week-long process. Then we have another leg. That's the first week of October. And then we have the election volatility trade. Fuck. That's like the end of the first week of October into possibly November 15th. We got a lot going on. And then, of course, we run from the middle of November for a holiday trade through December into January, first week of January. Man, I'm going to need like a fucking 2 weeks off when it comes. Like January 5th, I'm going to be dead. January 5th, 15th, somewhere in there. It's a busy time of the year. It really is. Like, this is like busy time of the year. I like Tom Lee. I like him. I like Tom Lee. I've got his painting up on the wall. I got our boy. Can you see it? I don't know if you can see it here. I got a painting over there of Tom Lee. It's not in frame. I got to get it in frame so you guys can see it. I had it in frame and now I don't. I got to get it back in frame. I'll move that painting. I'm actually, I think I'm going to be moving offices soon. I don't know how soon, but my oldest is in high school, college at the University of Michigan. And I'm going to try to move my office when she's done with her fall semester. Get a nicer looking background for you. Don't be atting me that you want to get long up here either. I've got Tom Lee back there, and I've got Mike Burry. The next painting that's going to be completed is, do you guys know who the next painting is going to be of? See if any of you guys remember. Do you guys know who the next painting is? I got the fogger here. I haven't set it up. Dude, I've got a fogger here. I've got a laser. I've got like this. I have an illegal laser basically, and I have a fogger, a laser, and I have an entirely like kick-ass XLR setup. Haven't installed any of it. Mostly because the XLR is like going to probably cost me another 5 or 10 grand. For what my current setup does, easily cost me that much money. And it's like a rabbit hole. Does anybody know? Hold on a second. I got to do this. Sorry about that. No, it's Dan Ives. I already told you guys this. I talked to Dan Ives. I actually talked to him. Told him, asked him if it was okay if I commissioned a painting of him. I've already commissioned it. It's just not done. The next painting is going to be Dan Ives. Buyers crushing it right now off the 4-hour order block. This is the 4-hour order block down here. Stepped right in. Nobody's business. Crushing it right now to the upside. You guys don't know who Dan Ives is? Guy's gangster. He's got one of the best dressed traders on Wall Street. I gotta do a woman though. I gotta do a woman next. I'd like to do what's her name? She's the one that does paper charts. Woof. I find that super hot and sexy all in itself. Like breaking out paper charts. I'm like, woohoo! Hit me. Yeah, sunglasses you need sunglasses to even see him 100%. G-Man 77. 100%, brother. Yeah, Meisler, Helene. Meisler, I'd like to she's hot. I'm a fanboy. Nah, BE, you got it right. I'm a fanboy. That shit turns me on. The frame on the desk, that's Becky. Jim, stop cursing. I've been trying to clean up the show, and I'm trying not to swear as much as I do. I was in the Army. The Army taught me how to swear. And I'm trying to clean up my image a little bit, not be so use like I have a tendency to use gallows humor. A lot of that experience will sometimes pop out here and there. The humor, the black humor, and the pushing people's buttons, all that stuff. It's all military experience stuff, and trying to get rid of it, not show it as much. Be a little bit more respectable and presentable. People like the good guy. They like happy, nice people. I don't know why. But that's what it is. So there's something else too. It's interesting. Like 2 months ago, I had someone like send me a really nasty email, and I was like, yeah, F that guy. And then I had another guy email me, DM me this time, and he was very persuasive. He's like, I work in construction. He's like, and I work in people's homes. And then he's like, other people I'm sure have you on in their office or at home. They may have wives or husbands or children or people over or people in the office or people or they're in a place where they want to keep you on, but they don't want to hear some of the color that you add. And this person was like, I don't mind it. I like it. He's like, I really like it. He's like, it makes me laugh. I'm having a good time. He's like, I'll have you on sometimes, and there'll be like a client there, and they're like, who's that person in the background?
Shortly expecting the results of the Fed reverse repo.
And they don't have context, right? They don't have any context. They just hear that 30-second or that 5-minute rant, and they're like, this is unacceptable. People today in particular are society today is not what it once was, right? Like the 1970s and 80s, you'd watch a movie and you could see anything, right? That's not the case anymore. People want sanitized. People like sanitation, more have you guys noticed we've become more puritanical as a society? Or not society, in the U.S. in particular. We've reverted a lot to puritanical, sanitized acceptability. This isn't necessarily wokeness either. This is partially wokeness, and partially it's Puritanism, believe it or not. And so there's no real place for it anymore. You can get lots of trouble today. So it's like you're being pulled by two different groups of people, right? You're being pulled by people that say, "Hey, this is unacceptable," which I'm like, I understand that. I've got a friend here, Winky.
Parties take 305, spot 8.
I have a close friend. So Winky is my close friend outside of the market, and he's counseled me. He's like, "Hey, man, I know that you think that, or when you were a kid, you were raised to that this, like you weren't being bad by using these words, or you weren't being this or that." He's like, "But young kids don't feel like that anymore. They take offense to that stuff, and I don't want to be that old boomer guy. I don't want to grow into that person that disrespects change in society." So I respect that. But then you also have the puritanical people piling in on that as well, right? So you have like a double effect. You have the double effect of it. And so you get really bland. Everything is bland. You guys don't see that? Everything is bland. It's like you can't offend anybody. You can't offend the right, the left. You can't offend anybody. So there's like, not that I want to go that route, but at least like clean it up a little bit. Like take the rough edges off, all that kind of stuff. And if this is what I'm going to do, if we're making the jump right now to, like we started out the first 3 years, it was just for friends. Like for real, this stream was for about 100 to 300 people, just friends. We would trade together. We'd have chat rooms we'd talk in, not even a Discord. We had like a DM groups and stuff like that. We would chat there and be like, you going long, you going short, that kind of stuff. And we'd trade together too. And there was a moment where there was one day where our group was divided on market direction in a major way. And Joe Donut was the guy. He was like, you should make a video and explain yourself because they're not understanding you. So I made a video, explained myself, and I ended up being right. And I stunk at making videos. And the other thing about videos was that I didn't like was that you can change your thesis at a moment, and you should as a you should have the ability to make a plan, and if it goes against your plan, that you have a counter plan to that plan, right? As a market participant, you want to have you want to have an idea of where we're headed, if that's invalidated, where we're gonna go, and how to adjust to that that price action, right? Because like strip everything away. I'm a price action trader. In truth, like strip all of it away. I'm a price action trader at heart. So I'm okay with being wrong. If I make a plan and I'm like, we're going to 200 today on SPY, and we end up going higher, I will literally reverse myself and get long.
Meeting minutes.
To wealth preservation, make money, all that usual stuff, right? So we were making videos, and then Joe was like, "You should start live streaming for all of us." So we did. That's what we did. And now we're making. Of course, it came to the point where it cost me so much money to do this that we had to make it sustainable. So we're like, okay, how about we leave everything how it was? Then we'll just add more stuff and ask the community to support what we're doing to make that jump. So if we're going to make that jump, which we are, we've been doing it. We're in this big beta mode right now. We've been in it for, I believe, since late spring, right? I want to say we started the jump in March, April, somewhere in there. We're now in September.
US, under 45 minutes now.
So
7 o'clock London time.
there's a lot of change that has to come with that if we're going to make that jump. If I'm going to be a streamer or a market commentator,
SEPs and the press conference,
or your companion day in, day out, if it's going to be you and I out there all day long together, then I want to make it so that you can listen in, not worry where you're listening in. Maybe it's not PG or G, but it's not rated R either. It's not. And that's going to take some work for me. Like, you'll see this evolve over time too. It's not going to be overnight, because I really do give you everything as I am. Like, I want you to know that. Like, well, not that I swear like that everywhere. My kids don't hear that stuff. I don't present myself. But my emotions, my thoughts that are going through my head, I do. Like, on this stream, I give you the truth that's going on in my head. It's like my confessional. And I don't want you to feel like you're alone out there, that you don't have those feelings. I've been there. I told you a story once where I broke a desk down. That's not a lie. I literally had my wife and children leave when I broke a desk down piece by piece. In my office. I was so angry. I lost so much money, and I was alone. And I was devastated for 3 or 6 months. I got back into the swing I started getting back in the swing after 3 months. I didn't trade, I think, for 3 straight months. And during that time period, I was very alone. I couldn't discuss it with my wife. I couldn't discuss it with my friends.
And just seeing that latest New York Fed reverse repo operation demand this time is at 306 billion across 63 counterparties. Yesterday we saw 256 billion across 55.
I couldn't discuss it with my family. I couldn't say to my wife, I just lost $130,000. Wasn't 30, it was 120 or something like that. I couldn't tell my friends. I couldn't tell my neighbors. I couldn't tell my brother, my sister. They don't understand. They would think I was crazy. And of course, internally at that time, I've done that 2 or 3 times, I think, at this point, and over the years, and I had no one to turn to. And it's all internalized. Your trading is a lonely thing, generally. It's a lonely thing that you do. You like interact on social media or in FinTwit and stuff. You make insightful commentary or comedy, fin comedy or whatever. But the life of a trader is very, very or lonely. Be the best way to say it. So that was part of this too, right? Like, I don't want you to feel alone out there, and that you're you're not the only person that goes through the emotions or the thoughts or the devastation when you lose, or even the excitement when you win in a big way. How do you tell people I just won?
Just over 10 minutes time.
In a huge way, or how do I express that?
As a reminder, the central bank
when you win big, it's intoxicating, right?
As expected, citing continued easing in broad inflationary pressures. And Macklem in the presser afterwards said there was a strong consensus for a 25 basis point move. Alternative scenarios were discussed, including the slowing of pace cuts and also a 50 basis point move. Nonetheless, Canadian job data in August since has been worrisome, as the unemployment rate rose higher than expected to 6.6%. That's above the expected 6.5%. Unemployment change was 22.1k, below the expected 25k. Since the job report, in an interview with the Financial Times, BOC's Governor Macklem said the labour market is painting towards some downside risk, and that if growth does not materialise as expected, it could be appropriate to move fast on interest rates. In other words, the governor opened the door to 50 basis point moves should growth disappoint. So it'll be interesting to see the minutes and how the remarks differ or align with Macklem's recent comments post the August jobs report and the views of the central bank on the downside risks for growth and the risks posed to the labour market.
I think at that time period also was like at that time period I was trading, listening to Mr. Yen, and I was also listening to Benzinga Charlie, if you remember him. I would listen to him, and then they cut the show down. Then they stopped carrying it. It was on Thinkorswim, and so at that there was a moment where I couldn't listen anymore. Mr. Yen was going through some health issues, and he wasn't streaming as much. And then Benzinga Charlie was not on as much. It was then I got cut from Thinkorswim, and I was just like, wait a minute here, I need a companion. And I got my friends that are asking me questions, and I'm like, man. So you know what I actually did was, before we started streaming, I searched around to see who else was streaming, and there was all kinds of different streamers out there. They were doing different things, or they were only on for short periods of time, or they would only be on when it was the best time to trade. And I really wanted somebody that was my friend. 9:30 in the morning to 4 p.m. Generally there every day. Not an easy task either. I wish right now that if David AMS, I haven't asked him at this point, but I would really like to have a partner streamer. So to alleviate some of the time that I stream, because it's hard to do it. It's not easy to stream 5 days a week, 250 plus sessions a year. Life comes up, kids come up, you get sick. It takes a lot of preparation to do this every day. So, but to be able to just be I know that this guy's going to be on every day. I can turn him on in the background, whether I trade with him or against him, or I'm trading a different product or something. It doesn't matter. It's just that voice on in the background constantly all day long. And you tune him in, turn him off, go to lunch, come back, turn him back on, and he's there. And it's not CNBC, it's not Bloomberg, it's not someone with a polo shirt selling you home or whatever, or pumping and dumping, or selling you Ginsu knives, or the next crypto scam, or whatever scam they're doing right now. NFT this, or have some commentary on what you see in normal life. You hike and bike and skiing, are you playing sports, football, politics, whatever. Some light conversation on that stuff, and it's a solitary life being a trader. It's not fun. Well, it's fun, but that solitude sometimes can become you're just I just want to have a voice in the background, and I can't. I've tried listening to CNBC, the commercials, I can't. I tried listening then to Bloomberg, couldn't do that. So I was like, why can't there just be somebody out there doing this? Monday through Friday, please. Squeezing higher now. Trading 563.68.
Do you want to
see if we can tag that upper move here? We're going to try to crank up and trade 56.50.
Today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of one.
Pay very close attention to a squeeze right now. See that white bar above right over there? See it right there? It's right there. Come on, baby. Get up there and hit it. Tag the upside move, please.
So, some governing council members were more concerned about downside risks to inflation, and concerns about the downside risk was linked to potential further weakening of the economy and labour market. Other members took the view that risks to inflation outlook were balanced. Governing council agreed it would like to see the economy grow at a rate above potential output. Members discussed whether weakness in Canadian consumption and housing could partly be due to caution on the part of the households. Members felt consumers could be waiting for lower rates to make large purchases to enter the housing market, and members discussed a scenario where the economy could rebound faster than anticipated. In this case, it might be appropriate to slow the pace of rate cuts. And
SPX with more room to run right now. They could even go higher.
Weaken. In this case, it might be appropriate to speed the pace of cuts.
Let me just check this really quick.
Council felt low U.S. saving rate was a possible indicator of weakness going forward.
This target right now, Tuesday, 12/12.
By excessive upside surprises in U.S. household spending.
We're coming into it right now. One quick second here. Target, red box right there. Sorry about that. First target hit. There's more room to run right here. SPX Gamma squeezing higher right now into resistance at 56.50. Come on. It's 56.4.18. Now target 56.4.35. One more punch. If you have been long, this is a place to get out, but there is more room to run to 56.4.35. There's a little bit more push to the upside here. If you are going to leave some runners on, make sure you take it off once we get up into this zone right here. Very dangerous. Danger. Profit taking. Runners here. Time is 1:33. Vol control gang in the house right now. Golden Nugget from 11:30 until 1:15 in the afternoon had a back test of the 4-hour block. Full move from that block coast to coast. 0.5% upside move. Congratulations. SPY moving higher right now. Creeping up to SPX resistance, which is light actually. Resistance at 56.50 is 66 million. It's not 120. It's not the top. It's vol. Pay close attention to as we approach that number. Do we immediately sell? Do we go above and consolidate and pull back? Behavior is critical as we head there right now. Now squeezing higher to 56.4.28. Still a little bit more room to run up here. 56.50 is the next natural resistance. Be careful here. Some of the, if you watch book map down below, you're seeing some of the liquidity disappear in the bottom of the market there. Sellers going to try to come in and swing this lower into the report.
Moody says initially the US Federal Reserve rate cuts will be credit negative for most US banks.
Watch that 1 minute trigger to the upside here for a back test to go higher. Whoa! Taking all your stops out right there. Look at that. Are you going to buy that dip right there or not? Was that the angry place up there or what? Look at that right there. Look at that whole move right there. Savages. We got hedge funds watching right now. There's like a hedge fund out there just going slam, sell, slam, sell. I should take a snap of that right there, shouldn't I? Look at that. Wham. We didn't get the wham there, but we got it right there. Wham, straight up. The high tick at 564.28. They did not like that at all, did they? Savage. Savage. Is like Prism 686 out there just slapping the sell button? Hold on, we'll ask Prism if that was him. Oh, what am I doing, hon? So touchy. I just posted it on FinTwit. Yeah, 686 Prism. He's like, he's a dealer, I think. I think he's a dealer in real life. I just posted on FinTwit. I was like, so touchy. I was gonna say, show me your fingers. Prism's got big hands. All right, what are we doing here? Let's get back into the business here. Remember that we have, let's take a quick look here from this morning. Right there. Let's go over and look at the trigger screen really quick. So this is 9:30 right here. $9.30 low right here, okay? Just so you can see it there. Also remember that the initiation, the instigation of this move was at the 4-hour order block over here, right? We got the 9:30 opening price. This is kind of like neutral. It's 143 right now, so we're coming into the press release. I'm going to switch over into switch the format here. It's 1:43. We have 15 minutes left. So we've got the Harlem Globetrotters that are out there trading all morning long. We're now going to get our serious faces on. We've got 15 minutes left. I'm going to switch over here. Give me just one quick second. Quick second here. I want to give you a quick prep in at 2 p.m. and we're going to chat about it, okay? So, just so you know, as this release comes in, right? I want to show you what a 1% down move is. Current price. Right here. 557, okay? I think we can break that and get down here to this daily trigger easily if we get a disappoint. That buy the dip is down here, okay? I don't think this holds in any way, shape, or form to disappoint. Remember to trade the extremes. %1 move basically puts us up into that 570 range, depending on how you're counting. It's like that 570 would be an upside target. Give you one quick second here. We're going to switch over to a rate decision. Let me see if I can get this all correct here.
Just of note here for.
So we hit our first. If you watch the screen in the top right here, okay?
Raise its quarterly dividend.
We hit our first target. Good.
58 cents a
US
share.
interest rate decision with a forecast of a 25 basis point cut to 5.25%.
On the geopolitical
and
footing
primary
here, Russian
change
President
at
Putin does order to
5.5%.
sign.
We get the FOMC summary of economic projections and the FOMC rate statement. Looking at some investment bank commentary, JP Morgan say, given the lack of a clear message from the Fed and on the economic outlook, 25 basis points may be the more favorable outcome. This view is further supported by an inline CPI print and stronger retail sales print. However, if CPI and retail sales miss the downside and the Fed does 25 basis points, then that likely keeps the market on the recession narrative. They also say 50 basis points would be a better outcome, but it is unlikely that either CPI or retail sales are changing the Fed's view despite the potential impact on the markets. Fed's Williams and others seem to be fine with a 25 basis point cut, an interpretation shared by Wall Street Journal's Tim Moreos via his account on X. Typically, the Fed takes a gradualist approach to easing, meaning 25 basis points per live meeting while reserving more aggressive cuts for economies under duress.
So on your top left-hand screen, you will see a gamma profile for SPX. On the middle screen here, you'll see Dixie. And on the right-hand screen, you're going to see Tits and Ass TNX. There's an upside target of 3.77, 3.8 on TNX. One quick second here, guys. We're almost there. One quick second here. So we got our upside.
At 2 p.m. Eastern Time, we get the US interest rate decision forecast, a cut of 25 basis points to 5.25%. On the prior, no change at 5.5%. We get the FOMC summary of economic projections and the FOMC rate statement. Looking at more commentary from investment banks, Wells Fargo say through month-to-month volatility, inflation remains on a decidedly downward trend. In the meantime, the ongoing cooling in the labor market has come perilously close to being too cold, and we now see the risks to the Fed's dual mandate are skewed to the jobs market. The consensus among committee members doubtlessly will be in favor of starting the easing process, though there is a debate over the magnitude of the initial cut. Our team is anticipating a 25 basis point reduction in the federal funds rate to 5 to 5.25%. Even so, given the market softening in the labor market since the committee last met at the end of July, the door to the larger 50 basis point cut has been kept open, and we would not be totally surprised if the FOMC opted for the bigger move. They also say the previous summary of economic projections published in June showed the median FOMC member thought only one 25 basis point rate cut would be appropriate by the end of this year. In the September SEP, we expect the 2024 median dot to fall to 4.625%, implying 2 additional 25 basis point cuts this year. The dispersion of dots is likely to be wide, and we would not be surprised to see at least one dot as low as 4.125% and an upper end of the distribution at 5.125%. For the year end 2025, we expect the median dot to fall to 3.375%, implying 125 basis points of easing next year.
Goldman's Josh Schifrin saying they'll go 50 today. The communication has been confusing, but if you follow the path of the data, the language of Jay Powell at Jackson Hole, it leads me to 50. Powell was very dovish at Jake Jackson's Hole. He didn't want further weakening in the labor market, and data since has been broadly weak. If you follow that line, he will push for a bigger cut given how far they are from neutral. Note that Goldman officially still expects 25 basis points. Fed futures funds implied probability of 50 basis cut now at 55% from a high of 64% yesterday. I'm going to switch back over just quickly for the initial presser. So from this layout that you see, I just want to make sure we're ready to rock on this. I'm going to switch back over right now to the regular screener, and we'll jump back in over to it once the presser begins. We're going to go right back to the main screen now, and we're going to leave this one on, this reaction function down below. I want you to also notice as we come into the top of the hour at 2 p.m. That the market is going illiquid right now. Liquidity leaving the market. You can see it on Bookmap currently. This is SPY. Down below, we have SPX with Gamma. In the middle, we've got Dixie. And then on the right, we've got TNX for a reaction. I will get the FOMC press release before the presser. I'll read to you anything that's important as it comes in. The forecasts. Median rate forecast current year, 4.625, 5.125 in June. The median rate forecast of 2025 is 3.625. It was 4.125 in June. The FOMC median rate forecast 2 years out is 2.875. That's bullshit. There ain't no way that's happening. No way. As this data is released, you'll hear a news squawker in the background. I will also read some stuff off to you. I'll also post for you in the Discord the transcript. Let me know in the chat. 0, 25, 50. And if you want, also write the reaction to it. 50 upside move to 570, 25 basis points crater, whatever you want, right? Whatever you want right now so everybody can get what you think is going to happen. Doug Fuller checking in the Discord right now. I'm positioned to ensure I'll be here tomorrow. I'll leave the next 2 hours for the Cowboys. Straight down to 0, por favor. That's C. Tazo. Addy, so polite. I am Doug Fuller. Watch the 1-day and 30-day VIX right now, brother. I am Doug Fuller asking if anyone's watching UVXY. Nick saying 100 today. Captain Shonsky with 25 and up. Waterboy saying 0.25 data dependent. Yeah, you're getting a talking to today. I would not be surprised if you see Jerome break out the iPad and the charts today. He's gonna have a big talking for you guys today. Expect this presser to be quite involved. Good one. Corvick saying 25 and RTY tanks. Woo! Green Vegas saying, don't care, just want huge move initially for a huge reversal possible. Nettie Confetti saying 50. Felix saying 25. Aloha Gua saying 25. Nick S. wants 1.25 today. You dirty cocaine. We got the Coke monster. Poke the juice box. You can tell he's a perma bull. Watch him hike. Kendall's saying no wave on 50 today. Gamma 1977 saying 0.25 today in dovish commentary. Yeah, we're going to need a talking to today. They're going to have to wrangle this market in, aren't they? Chappie saying raises because he's a dick. Somebody else, or Lead for All says, don't blow up your bankroll. G-Man says 0.50 and we might have to go back up. Photon Trader 0.25. Waterboy hike 0.25. But they're saying that Bob Kendall's saying you're getting 25 VPS, no way 50.
1 minute remaining. I'll lead with the U.S. interest rate decision.
1 minute. We're almost there, boys. I'm going to crank the volume up here so you can hear it. Look at that. Look at the chat is blowing up right now. Jerome's getting the paddle out. What color tie is he going to have? Let me know in the chats. All 3 chats, let me know. We're getting purple, red, green, baby. What are we getting? Terrawolf. Terrawolf's got the red on right now. Personally, I'm looking for a quick dip
from macro headlines
and to buy some cheap 0-date calls.
$1 a year for our real-time service.
Seconds.
Oh, missed it.
50 basis point cut. 50 basis point cut.
Woo!
More than
Baby!
point cut.
I missed it. Oh, fuck.
So the Fed note inflation has made further progress toward 2% objective and
Trading hit the first target just then.
downside and
566.16 pinstripe.
key overnight interest rate by 50 basis points, and the median view of Fed funds
Next target 569.26 to the upside.
2.8%. The Fed will carefully assess incoming data and the evolving outlook and balance of risks in considering the additional rate
569.26 next target.
activity is expanded.
Above 570.
Job gains
Above that
slow.
571.94. Above that
Low.
Valhalla, baby.
Economic outlook is uncertain. The FOMC is attentive.
If you're in call spreads from yesterday,
View
congratulations.
of Fed funds rate at the end of 2026 is 2.9%. At the end
Trading
of
566, 568, 91.
2024, 4.4%. The FOMC has gained greater confidence in inflation moving sustainably towards 2% and judges risks to employment and inflation goals as roughly in balance. Median view of Fed funds rate at the end of 2027 is 2.9%. The vote in favor of policy was 11-1, with Fed Governor Bowman dissenting. Bowman preferred a 25 basis point reduction.
Surprising that we got a dissent right there. That's not normal.
Previous pace, and projections imply 50 basis points of additional rate cuts in 2024 from the current level.
Whoa, proposed another 50 this year. They're going to price that shit in.
2026.
Propose another 50 basis point cut before the end of the year.
Fed policymakers see the end of 2020.
Dixie getting hammered right now. TNX getting hammered right now. Note that we're coming into the call wall at 5,700.
2.8%. Fed policymakers see 4.4% unemployment rate at the end of 2024 and 2025 versus 4.2% now. They show 9 of 19 officials see the policy rate above.
No. What is it priced into?
See it at the median.
What's the 100 basis points priced into, though? Priced into what? What's it priced into? Bah humbug. What's it priced into? Cash market? You know that's not true. What's it priced into? Cash market?
Traders price more Fed
Bond market
after the revised forecasts.
SOFR, that's right. Is it priced into retail FOMO, bah humbug? I'm just pulling your chain.
US rate futures price in chance of 64% chance of a 25 basis point cut in November meeting.
Traders pricing in more Fed easing after revised forecasts. Fed policymakers see 2% GDP growth in 24 versus 2.1 in June. We had GDP now come out projecting 3.1, I believe, next year.
On the session.
High target failure at 568.70.
0.5% at 5,676. Yield on 10-year US Treasury notes fall.
TNX recovering right now. Dixie still lagging.
Basis points to 3.657%, and 30-year US.
I'm going to go to the bottom right-hand screen so you can check that out really quick.
Points to 3.987%. The 2-year, 10-year Treasury yield curve steepens to 9.4 basis points.
Over on the right over here, you can see the original sell point here at the call wall. You would need to see a triggering of call buying to get above that call wall. So you have 5,700 on SPX. You want to see instigation of call buying to create more gamma to the upside to trade 5,750. There's no more important gamma at the moment above. So you're going to be looking for an instigation of that gamma becoming important, of course. The initial reaction being sold currently. If you're looking for a dip to buy, it's at 56.50. 56.50. That's at the 12 o'clock bar at the 12 o'clock bar at on Tuesday. That relates to main screen. That means you would come back in and buy this dip. If you're looking for the next dip, somewhere down in here, right around there. 56.4.3, 56.4.35. Currently, we are on R2 right now, parked on R2 on SPY. Heading to the bottom right-hand screener again. Dixie, still trading at 100.44. There is a target lower at 99.60. It's not showing up on this chart, but 99.60 would be a low target for Dixie. It is there. Trust me, it's there. We have the initial reaction to the upside on TNX. TNX now selling again to the downside. Let's take a quick look. I don't have it on this chart down here, but you can see some price action going on yields. Gold ripping to the upside. So the initial pump, we actually broke through the first resistance quite well. We know that we're going to get the rejection on major resistance. That was up above, very close to the target up here of 570. We'll be awaiting the presser from Jerome Powell to see if he can pump this market up into the end of the day. If we can actually begin to get that call buying going. Hold on one second here. Make that gamma upside gamma matter. Pay very close attention down here too. You see this orange bar down here? We got that roll. Just show you this right here. Maybe you get that other roll and then it blasts down really quick, and then we go higher into the 230 presser. Never ever think that we can't go lower into a presser. Don't ever believe that we can't. Keep your eyes on that orange bar down there. If you see price swoop down there for some liquidity, very easy to do and have that happen. So we'll leave that right there. This is the initiate. Dude, I tried to capture this down move. It was just too fast. I was trying to get in a trade, and I'm like, no. Didn't even give me a chance to get 0 date, so totally missed it. I wish I hadn't missed that. Too fast for me. Normally not too fast for me. Normally you get that red bar, and it's like 30 seconds, 45 seconds gives you time to get in. It was like red and then boom, green. No time, baby. No time to even get in that trade. Whew. Anybody out there in those call spreads still from yesterday? That was a stupid trade. Let's look at that really quick. That trade from yesterday. If you are in that trade, gangster. That was a 1.31% move. Whew. The upside expected move on the day, we've already hit it. So upside expectations basically have been hit at this point. Could be an argument made that we could hit this upside target here, and possibly this stuff you could still hit that. Downside target still not hit on the day.
Chance of a Bank of Canada cutting rate by 50 basis points in October, up from 46% before the Fed cut.
Intraday base, we got this dotted line is going to be your 2:30 press conference. Jerome adjusting his tie right now. He's got the cameras on in the back room. He's watching. He's watching the reaction in the market right now.
The U.S. is to seek up to $6
He's
billion
brushing himself off. He's got Janet Yellen behind him with the lynch roller. She's unzipping her mouth from the the leather play that they were doing before the announcement here. Sellers wanting to see us hit the downside target. 1% down move. We'll see if they can get that in the presser. Now time for Powell to convince, right?
I want to stay up to date with the latest and be on the bleeding edge of news for
banks yesterday telling you that 50 basis point reaction was priced in. Doesn't look like it here. That looks positive, right?
And saved 92%.
Now you've got liquidity above. That was grabbed, and now the question becomes, can Jerome not panic the market that he is over-tightened? That's the next thing, right? They're saying that they're proposing full 100 basis point cuts before end of year. The thesis now is not, or not the thesis, but the onus is on Jerome to tell you why he is not over-tightened. Why is it appropriate to begin making cuts? He's going to explain to you what I told you earlier this week, regurgitated to you. He's going to give you 50. He's going to give you 25, maybe 50, but he's going to be talking to you, more importantly, about why he's doing that. And he needs to make the market and Bob on Main Street believe that they have not over-tightened. It's a precautionary measure. They're data dependent on shocking the velocity of a lot of data that is violently coming back into line, has not overshot, that is violently coming back into line, and that they're only trying to stop that velocity, and that they're even open possibly to more rate increases down the road. I believe that. They're going to say that to you. There is a high likelihood to not shock the market that they will be willing to raise rates again, data dependent. Market coming back down, trading that orange bar that we talked about. And I will warn you of something. Just like if we didn't get any rate cuts today, if we get the 50, which we did, right? I told you that if you didn't get a rate cut today, that there will be people out there, myself included, that will panic, right? The same inverse. From this point forward, they have to convince market participants that they have not over-tightened. That is a big ask. There will be people out there that think, oh shit, something's broken, they haven't told us yet. You will also get that narrative. That narrative will be spun to you. Also note that the initiation on the 4-hour block here was rebought slightly higher at 56.184. Dixie in disarray. SPY underneath its local resistance point. TNX looking wobbly. No, I think what they're going to say to you is what I've already been telling you for all week long. They're going to tell you, like, data dependent, don't guarantee fit another 50, but we are open to 50 to data dependent. We need 1 to 3 months of data to find out if we're reining in the velocity of some of these data points. We're back in trend, baby. They're open to another 50, and they're going to tell you also that after 3 to 6 months, that they will be willing to even raise rates again, believe it or not. They're just trying to rein the velocity in. That's it. That's all this is about. That is their mandate. I'm going to read a few of these things to you really quick. I'm going to give you the statement inside the Discord. There is the statement from the Fed, if you want to read through it. Here are the projections. The dot plot, which is bullshit. I don't trust that thing. That's gambling. I'm going to read some key points from the press release to you. Fed officials' median view of Fed funds rate at end of 2024 is 4.4%, previously believed to be 5.1%. Fed officials' median view of Fed funds rate at the end of 2025, 3.4%, previously 4.1%. Fed officials' median view of Fed funds rate at the end of 2026, 2.9%, previously 3.1%. The FOMC has gained greater confidence in inflation moving sustainably towards 2%. Judges' risks to employment and inflation goals are roughly in balance. Great way to word that. Median view of the Fed funds rate at end of 2027, 2.9%. I don't believe that for a minute. Policymakers see end. Mark my words on that, by the way. Fed policymakers see end 2024 PCE inflation at 2.3% versus 2.6% in the June projections. Core seen at 2.6% versus 2.8%. The dip is being bought right now. Expect a dovish Fed president presser. Fed policymakers see 4.4% unemployment rate at the end of 2024 and 2025 versus 4.2% now. That's a little generous. I'm a bull and I think that's a little generous. Fed policymakers see 2% GDP growth. Well, I shouldn't say that. If they're seeing 4.4% unemployment at the end of 24, well, that's not generous. The 2025 part is the generous part. They think that we'll be at 4.4 at the end of 2025. I disagree. If they are, then that Fed rate projection is goddamn bullshit. You are going to see major rate cuts to get there. Fed policymakers see 2% GDP growth in 2024 versus 2.1 in June. Traders price in more Fed easing after revised forecasts. U.S. rate futures price in a chance of 64% chance of a cut of 25 BPS in the November meeting. Though the Fed did say 50 is on the table in that November meeting. A little bit more juice for you, right? After the election vol. You should have some project. I want to give you a warning right now if you're a bear. Any kind of reining in from now into the election volatility should result to an upside major move in the S&P 500 to trade 6,000 by year end. Warning to you if you're a bear. Even on any major lows, if you get some volatility, expect 6,000 end of year by what I can read right now. That's all I got for you right now. I would expect that. If you are a bull out there and you are expecting this whole thing to get reined in, if you're FOMOing right now and you see a major low between now and end or middle of November, You should be targeting 600, 6,000 in year-end and a holiday rally.
FOMC press conference with
That's pissing a bunch of you off right now, I bet.
Found on the feed, if anyone interested.
6,000 is back on the table, boys. IWM is gonna go. I'm gonna get you guys some forward projections on IWM. I will get them to you through the week. I'm gonna get you some 4-hour and 1-day projections into end of year. Though you will still, I want to be warning to you. Maybe they price it all in early. That's possible. If they don't price it all in early, you're gonna get a nice fat dip between now and November 15th. Get a sexy ass holiday rally. $2:21, 9 minutes until Jerome. Dude, he's such a stud. You know he's got like the special shoes on today. He's got those handmade leather wingtips. Got that handmade suit on today. He's got that high count suit. Feels like a $20,000 horsehair bed. It's like, feel good today. He's like, I go left, I go right. I go left, I go right. He's like, I got this. Yeah, Ferragamo bearskin suit on today. He's got a Ferragamo bearskin suit on. It's all sexy and no mattedness. It's all brushed out. He's got some nice. He's got like the fur softener in it. Uncle Leono saying HYG rocking on 80 handle for the first time since May of 2022. We're in the bubble for HYG right now, too. Did you notice that? We're back in line. You guys want to see some shit on HYG? Like, HYG is back in line to its trend pre-COVID right now. Snap a line all the way back. Where's Chase Winter? Someone bring me Chase Winter right now. Where's Chase? Jerome's opening comment, fuck you Bears. Oh, God. Oh, no, where's Andy? Oh, no. Where's Charlie McGilligot? He sounded like he was pretty bared up today, wasn't he? A whole bunch of guys that are pretty bared up today. There's a lot of bears out there past couple days on record. Are we getting the Big Red Day post yet or no? Is he out there doing Big Red yet? Oh, man. Oh, God. Oh, God. The Discord's on fire right now. Oh, God. It's terrible. Watch out here, folks. This is a trap for you. We're losing liquidity in the market again. See that black box right there? Be careful of that for a drop lower. 6 minutes until the presser starts. IWM cranking. IWM should fucking moon. There should be no pullback in IWM. IWM should be no all grass, no breaks, up. Like up, outperform. All gas, no breaks. IWM on rate cuts, that's it. Policy change. IWM's been reined in now for years. It should explode. Explode.
In 5 minutes' time now, at the bottom of the hour, do you see the release of the FOMC press conference with Chair Powell? So to go over the order of business, Fed's Powell normally reiterates the rate statement, which we have already posted the headlines and the link to which on the feed, before taking questions from reporters, where we may see some new comments from the Fed's chairman.
5 minutes. We're going to switch over here. Please join us in the Discord. If you've been watching this show, if you're a free member, free community member, give us a shot. Sign up for a month. TradeTheTrigger.com. We got a bunch of cool stuff coming your way. Whole bunch of coolness. We've got traders trading, giving their entries and exits. We teach traders day in, day out, 24 hours a day. We got a bunch of cool tools in there. We've got Unusual Whales, full suite. Trady Ticks, full suite. BB Bot for Gamma, full suite. We give you market briefs every night. We give you Elliott Wave updates across the market. We give you access to the velocity just being a supporter with updated charts twice a day. Should I switch over? Should I get out of the TNX here? Hold on. Let's just go to IWM. IWM cranking, trading 225 on the high. Spoo's trying to turn local resistance at 56.50 into support. Note that downside target on Dixie of 99.60. I said 98, but it's 99.60. Bears on parade at the end of 2021. This is a pretty big moment here. 2021, Fed became non-adversarial. Oh, sorry. Fed became non-adversarial in COVID in 2020. They maintained that positioning. They forewarned of rate increases of QT. They're now forewarning you and have been forewarning you of a change in policy. Pricing in QT took a long time. Pricing in QE right now, QE infinity. That is the threat.
So we're shortly expecting the start of the FOMC press conference with Chair Powell.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
See if we can get this in real time. 1 minute left. We're going to go Big Burr. Here he comes.
Good afternoon. My colleagues and I remain squarely focused on
Real time now.
achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made
Powell says
significant
the economy
progress
is strong
toward our goals
overall.
over the
Voice
past 2
news
years.
disconnected.
The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today,
IWM on the move.
the committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years.
Target on VIX 9-day, 1435.
Continue to cool. Payroll job gains.
We're going up, boys.
16,000 per month over the past 3 months. A notable
We're going up.
from the pace seen earlier in the year. The unemployment rate has moved up but remains low at 4.2%. Nominal wage growth has eased over the
VIX 9-day getting shanked right now.
gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a half percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. Not on any preset course. We will continue to make our decisions meeting by meeting.
That's a big one right there.
We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP,
Oh, here we go, the charts.
wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we
Cocaine, baby!
do our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
We don't actually care about you young folk.
Look forward to your questions.
We care about boomers.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking our questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you were thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong.
Gun lock influenced these questions.
What changed and made the committee go 50, and how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead?
Whoa!
Based on what should we make that call? Thank you.
So, okay, a lot of questions in there. Let me jump in.
Steve's like, I got Ackman's got a question.
The two employment reports.
Eichen has a question.
We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll.
Russell Crowe just keeps pumping right now. Keep your eyes on Dixie to trade 99.60.
We've also seen anecdotal data like the Beige Book. And so we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the
National Association of Realtors just announced a conference called Realtor Man, where they're going to all go suck each other off and bang on your doors in your neighborhood and tell you to sell your homes.
A couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. Again, I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members, rather, of the committee are thinking today, assuming that their particular forecasts are realized.
Go ahead, Chris.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher? Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect, in the base case, to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%, inflation's down to a few tenths above 2. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment moving to a more sustainable level. So that the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. But what you have is our individual accumulation of...
Poke, I think we've got the close here, man, for that 3% Friday up move.
Howard.
We're talking in the Discord right now about buying the close on SPY.
How close was this in terms of the decision? You do have the first descent.
QE3, they ramped Friday like 3%, 2.7%,
Was this a very
2.6% or something like that.
A good discussion.
So they like rain in today, and then they just ramp the fuck out of Friday.
I talked about this at Jackson Hole, but I didn't address the question of the size of the cut, left it open, and I think we left it open going into blackout. And so there was a lot of discussion back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision.
Yeah, I agree with you, Poke.
I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year, all 19. That's a big change from June, right? 7 of them wrote down 3 or more, and 17 of the 19 wrote down 3 or more cuts, and 10.
Yeah, Led's saying that we could get the VIX expiration trade down tomorrow. Then you ramp Friday.
A lot of
don't buy the calls at the close today.
follow up to that?
Don't buy the Friday don't buy the Friday calls until Thursday low.
Steve, on the
I could get with that.
would you expect this to be running every other meeting once we get into next year?
Yeah, the ex-div day is wrapped up in that too.
As I mentioned, we
like you rein in today, right? You keep it within the 1% up move. You take the down percent, 1% move. You get the VIX expiration, reset the VIX. I'm watching VIX 9-day right now.
Toward 2%.
Let's go over there Let's go look at the VIX 9-day really quick together.
We can, make a good strong start, but
The volume, you'll hear this in the background, but I'm going to switch over really quick.
From an economic standpoint and also from a risk management standpoint was clear. But I think we're going to go carefully meeting by meeting.
We got people in the Discord right now. What they're saying is,
Gina.
what their point is that you get like the up and down move in today, right?
Questions.
You get the VIX-piration down move into Thursday, and then they ramp it like huge in Friday.
And staying there.
And you capture the DivX trade on the monthly too.
Climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing.
Let's look at VIX 90. That's support. The VIX 90 actually supports this theory or thesis.
Mechanism there, and what do you see as the risk?
So the VIX 9-day.
So again, the labor market is actually in solid condition.
So this is the VIX buy zone over here.
The move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's
it's like murder the VIX today, right? You go into VIX-piration and it goes wham up into Thursday and then back down on Friday.
Nick Timmeros of the Wall Street Journal. Chair Powell, does today's action constitute a catch-up in action given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
Okay. Multiple questions there. But so I would say we don't think we're behind. We do not think we think this is timely. But I think you can take this as a sign of our commitment not to get behind. So it's a strong move. Sorry, your other question was?
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably under 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level. And we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how the committee would approach end state?
The runoff is key here.
Policy.
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Colby.
Thank you. Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply, or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And, but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. By many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market, but this is more sort of 2018-17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
And just on the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So that's our plan, of course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that, and we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course,
we have begun the cutting cycle now.
Decisions meeting by meeting.
Woo! Cycle.
Michael McKee with Bloomberg TV and Radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
No, we're going to be watching all of the data, right? So if, as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%, over time. So. And policy, we think, is still restrictive, so that should still be happening.
I'm just curious as to how sensitive you'll be to the labor market, since you forecast we are going to see higher unemployment, and it is going to take a significant amount of monetary easing to just maintain it.
So, what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%.
That's huge.
We have a dual mandate, and I think you can take this whole action as take a step back. What have we been trying to do?
That translates into we're fine with inflation wherever it is,
without the kind of painful increase in unemployment that has come sometimes with disinflation. That's what we're trying to do, and I think you can take today's action as a sign of our strong commitment to achieve that goal.
Rachel.
Print me 569.
Rachel Siegel from the Washington Post. Thanks for taking.
Print me 569. It's 254 right now.
You don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important one probably. You're at 4.2%. That's, I know that's higher than we were used to seeing numbers in the mid and even below mid threes last year. But if you look back over the sweep of the years, that's a very healthy unemployment rate. And anything in the low fours is a good labor market. So that's one thing. Participation is at high levels. It's, we're right adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be their wage increases, rather, are still just a bit above where they would be over the very longer term to be consistent with 2% inflation, but they're very much coming down to what that sustainable level is, so we feel good about that. Vacancies over, per unemployed is back to what is still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed.
Watch VIX 9-day.
As measured, it's now below.
They're just trying to break through the daily trigger on it right now. They got the 5-minute, the half hour, and the hour swooping down on top of it. VIX is should get murdered.
Employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change, particularly over the last few months. And so what we say is, as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased. And because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect to learn between now and November that will help inform the scale of the cut at the next meeting?
More data, the usual. Don't look for anything else. We'll see another labor report. We'll see another jobs report. I think we get a second jobs report on the day of the meeting, I think. On the Friday before the meeting. And inflation data. We'll get all this data. We'll be watching. It's always a question of look at the incoming data and ask what are the implications of that data for the evolving outlook and the balance of risks, and then go through our process and think what's the right thing to do. Is policy where we want it to be to foster the achievement of our goals over time? So that's what it is, and that's what we'll be doing.
Neil. Thanks. Hi, Chair Powell. Neil Irwin with Axios. We've only been running a little above 100,000 jobs a month on payrolls the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come?
The Bulls need this conference to keep running right now. This presser to keep the run up.
It depends on
we don't want, if this presser ends.
If you're having millions of people come into the labor force, and you're creating 100,000 jobs.
Dealers trying to keep us in. Like dealers are trying to have us in right now for this presser to end. They don't want us squeezing right now.
Volatility of people coming into the country. We understand.
Like this strength, they're like selling into the strength right now while this presser's going on.
And that has actually been one of the things that's allowed the unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also watch carefully. So it does depend on what's happening on the supply side. And on the beverage curve question, yes. So we all felt on the committee, not all, but I think everyone on the committee felt that job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into higher unemployment, job loss. And yes, I think we are. It's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if not at it, so that further declines in job openings will translate more directly into unemployment. But it's been a great ride down. I mean, we've seen a lot of tightness come out of the labor market in that form without it resulting in lower employment.
Thanks, Chair Powell. Edward Lawrence, Fox Business. So we've heard some speculation that you may be going with the federal funds rate to 3.5%, maybe under 4%. And there's basically an entire generation that has experienced zero or near zero federal funds rate. Now some think we're heading in that direction again. What's the likelihood that cheap money is now the norm?
So this is a question. You mean after we get through all of this?
Cheap money?
Great question that we can only speculate about. Intuitively, many people anyway would say we're probably not going back to that era where there were trillions of dollars of sovereign bonds trading at negative rates.
Cheap money.
Trading at negative rates. And it looked like the neutral rate might even be negative. So people were issuing debt at negative rates. It seems that's so far away now. my own sense is that we're not going back to that. But, honestly, we're going to find out. But, it feels to me, and that
such a naughty word, cheap money.
Significantly higher than it was back then. How high is it? I just don't think we know. Again, we only know it by its works.
And one more. How do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivations?
Yeah, so, this is my 4th presidential election at the Fed, and, it's always the same. We're always going into this meeting in particular and asking what's the right thing to do for the people we serve. And we do that, and we make a decision as a group, and then we announce it. And that's always what it is. It's never about anything else. Nothing else is discussed. And I would also point out that the things that we do really affect economic conditions for the most part with a lag. So nonetheless, this is what we do. Our job.
Yeah, cheap. What he said, like the reporter, I just posted on Twitter.
And if we get it right.
The reporter just said the dirty words, cheap money.
So this really concentrates the mind, and it's something we all take very, very seriously. We don't put up any other filters. I think if you start doing that, I don't know where you stop. And so we just don't do that.
Jolene. Thank you, Chair Powell. I'm Jolene Kent with CBS News. My first question is, very simply, what message are you trying to send American consumers, the American...
Dixie reacting positively to that. We're not doing cheap money. Trading 100.714 right now.
The U.S. economy is in a good place, and our decision today is designed to keep it there. More specifically, the economy is growing at a solid pace. Inflation is coming down closer to our 2% objective over time. And the labor market is still in solid shape. So our intention is really to maintain the strength that we currently see.
Dealers trying to pin price in on SPY right now, trying to maintain.
Level, which has really been, the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level over time.
Just a quick follow-up to that. Listening to you talk about inflation moving meaningfully down to 2%, is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
No, we're not. So inflation, what we say is we want inflation, the goal is to have inflation move down to 2% on a sustainable basis. And, we're not really, we're close, but we're not really at 2%. And I think we're going to want to see it be, around 2% and close to 2% for some time. But we're certainly not doing, we're not saying mission accomplished or anything like that. But I have to say, though, we're encouraged by the progress that we have made.
Hi, Katerina Saraiva with Bloomberg News. I just would love to know kind of how the committee is thinking about the persistence we've seen in housing inflation. Do you think you can...
Housing is coming down. Why are you asking that question?
Where it is.
There's no housing inflation right now. None. We're rolling down in housing inflation. She's wrong.
That is kind of dragging a bit, if I can say. We know that market rents are doing what we would want them to do, which is to be moving up at relatively low levels. But they're not rolling over. The leases that are rolling over are not coming down as much, and OER is coming in high. So, it's been slower than we expected. I think we now understand that it's going to take some time for those lower market rents to get into this. But
oh no, you're going to see that by December. Realtor.com already has all this shit coming down right now. Case-Shiller is late by like 3 months. Case-Shiller is lagging huge.
Several years rather than just 1 or 2 cycles.
He knows that too.
Renewals. So that's, I think we understand that now, but I don't think the outcome is in doubt, again, as long as market rents remain under control. The outcome is not in doubt. So I would say it's the rest of the portfolio, or of the elements that go into core PCE inflation have behaved pretty well. They're all...
He already knows this data. He already knows this stuff's coming down.
And I believe...
He's bullshitting right now.
We'll get what we need to get out of the housing services piece, too.
Some of your colleagues have expressed concern that with starting to cut rates, you could reignite demand in housing and see prices go up even more.
That's possible.
What's the likelihood of that, and how would you react to that?
So the housing market, it's hard to game that out. The housing market is in part frozen because of lock-in with low rates. People don't want to sell their home, so because they have a very low mortgage, it'd be quite expensive to refinance. As rates come down, people will start to move more, and that's probably beginning to happen already.
That's right. That's right.
When that happens, you've got a seller, but you've also got a new buyer in many cases. So it's not.
He just let that slip briefly there.
Additional demand.
Housing prices are coming down. Like it's not public, or so it's public, but it's not the storyline of the Fed right now. It will be by December.
It's going to be challenging. It's hard to find to zone lots that are in places where people want to live. It's all of the aspects of housing are more and more difficult, and where are we going to get the supply? And this is not something that the Fed can really fix. But I think as we normalize rates, you'll see the housing market normalize. And I mean, ultimately, by getting inflation broadly down and getting those rates normalized and getting the housing cycle normalized, that's the best thing we can do for householders. And then the supply question will have to be dealt with by the market and also by government.
Victoria.
Hi, Victoria Guido with Politico. Just following up on some of the labor market talk earlier, monetary policy operates with long and variable lags, and I'm wondering how much you see being able to keep the unemployment rate from raising too much comes from the fact that you're starting to act now.
SPX testing its 4-hour order block again.
The market is strong. And then also, if I could, following up on Nick's question, do you see today's 50 basis point move as partially a response to the fact that you didn't cut in July, and that sort of gets you to the same place?
So you're right about lags, but I would just point to the overall economy. You have an economy that is growing at a solid pace. If you look at forecasters or talk to companies, they'll say that they think 2025 should be a good year too. So there's no sense that the U.S. economy is basically fine. If you talk to market participants, I mean, business people who are actually out there doing business. So I think, I think our move is timely. I do, and as I said, you can see our 50 basis point move as a commitment to make sure that we don't fall behind. So you're really asking about your second question. You're asking about July, and I guess if you ask, if we'd gotten the July report before the meeting, would we have cut? We might well have. We didn't make that decision, but we might well have. I think that's not, that doesn't really answer the question that we ask ourselves, which is let's look. At this meeting, we're looking back to the July employment report, the August employment report, the 2 CPI reports, one of which came, of course, during blackout, and all of the other things that I mentioned. We're looking at all of those things, and we're asking ourselves, what's the policy stance we need to move to? It's clear that we literally everyone on the committee agreed that it's time to move. It's just how fast do you go, and what do you think about the path forward? So this decision we made today had broad support on the committee, and I've discussed the path ahead.
Elizabeth.
Thank you, Chair Powell. Elizabeth Schulze with ABC News. Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers expect those rates to drop over the next year?
Very hard for me to say. That's from our standpoint. I can't really speak to mortgage rates. I will say, that'll depend on how the economy evolves. Our intention, though, is we think that our policy was appropriately restrictive. We think that it's time to begin the process of recalibrating it to a level that's more neutral rather than restrictive. We expect that process to take some time, as you can see in the projections that we released today. And if things work out according to that forecast, other rates in the economy will come down as well. However, the rate at which those things happen will really depend on how the economy performs. We can't look a year ahead and know what the economy is to be.
I agree with that. That 2026 path is complete bullshit.
home prices have still stayed so high as rates have been high. What do you say to those households?
Well, what I can say to the public is that we had a burst of inflation. Many other countries around the world had a similar burst of inflation, and when that happens, part of the answer is that we raise interest rates in order to cool the economy off, in order to reduce inflationary pressures. It's not something that people experience as pleasant, but at the end, what you get is low inflation restored, price stability restored. And a good definition of price stability is that people in their daily decisions, they're not thinking about inflation anymore. That's where everyone wants.
That's a good way to describe it.
To what's inflation? You know, we just keep it low, keep it stable. We're restoring that. So what we're going through now really, it restores, it will benefit people over a long period of time. Price stability benefits everybody.
Rein in velocity and data.
They don't have to deal with inflation. So that's what's been going on. And I think we've made real progress. We don't tell people how to think about the economy.
He doesn't want inflation slamming in at 2% and then bouncing off it.
Opposed to high inflation, and we understand that's painful.
He wants that curve to slow.
Hi, Chair Powell. Greg Robb from MarketWatch.com. I was wondering if you could go through, you said just at the beginning that coming into the blackout, there was like an open thought of 25 or 50. You know, the Fed could move either 25 or 50. I would sort of argue that when we had those two last speeches by Governor Waller and New York Fed President John Williams, that they were sort of saying that maybe a gradual approach was going to win the day. I mean, I sort of want to ask a 7-part question about this, but I mean,
these guys know that they have to rein this velocity, and these guys are lying. Like this guy from Market Watch already knows this stuff. This is all fucking bullshit. This guy right here is bullshit.
You know, after the
sorry for swearing, but that's true.
It was a really small.
These guys all know what they have to do. That's why we're at 50 BPS. There's there's no smoke and mirrors here other than the questions.
We're always going to try to do what we think is the right thing for the economy at that time. That's what we'll do. And that's what we did today.
Simon.
Some of these questions are loaded.
Thank you, Chair Powell. Simon Rabinovich with The Economist. You've mentioned how closely you're watching the labor market, but you also noted that payroll numbers have been a little bit less reliable lately because of the big downward revisions. Does that put your focus overwhelmingly on the unemployment rate? And given the SEP projection of 4.5,
like this is utter bullshit. Like these guys know. Like I'm a dumbass. I'm not a smart guy.
Be the kind of thing that.
No, I'm a crayon guy. But anyone can look at a long-term chart. You can look at a 10 or 20-year chart. And if you look at so when you guys get your data week in, week out, you're like, I'm looking at GDP now. I'm looking at
based on the
I don't know, industrial production, inflation. You're looking at retail sales, industrial sales. Fucking business inventories, you name it.
Of course, but there isn't a single.
Look at all those charts over 5 or 10 years. It's clear as day.
That might move. That would.
It's clear as day.
We'll look at each meeting at all the data on inflation, economic activity.
Anyone saying they should ease into cutting right now is out of their skulls. We've never had the swing that we've had
over the median
to this high inflation, like that violence to the upside inflation. And now we've got velocity to the downside, and we already know what will happen if they don't rein it in on this side. It's a process that, yeah, this is bullshit.
I know
Sorry.
you discussed earlier how the Fed does
These guys already know
where the right thing is and nothing else factors in. But in general, can you talk about whether or not you believe a sitting U.S. president
sit down, Market Watch guy,
in Fed decisions on interest rates? Because that's something that former President Trump, who obviously appointed you, has previously suggested. And I know the Fed is designed to be independent, but why? Can you tell the public why you view that so important?
Sure. So. Countries that are democracies around the world, countries that are sort of like the United States, all have independent central banks. And the reason is that people have found over time that insulating the central bank from direct control by political authorities avoids making monetary policy in a way that favors maybe people who are in office as opposed to people who are not in office. So that's the idea, is that, and I think the data are clear that countries that have independent central banks, they get lower inflation. And so we do our work to serve all Americans. We're not serving any politician, any political figure, any cause, any issue, nothing. It's just maximum employment and price stability on behalf of all Americans. And that's how the other central banks are set up too. It's a good institutional arrangement, which has been good for the public, and I hope and strongly believe that it will, continue.
Kyle.
Kyle Campbell for American Banker. Thanks for taking the questions, Chair Powell. A couple regulatory developments in the past week that I want to ask you about.
Oh, look at this guy. He's got sexy hair.
Supervision, Michael Barr.
He's got a stash.
For the changes to the Basel III Endgame. I'm wondering if you are in alignment with him on what those changes should be, if those have support on the board in a broad way that you're looking for, and if you think the other agencies are also fully on board with that approach. And then yesterday,
guy's got broccoli hair.
You know what? Hold this.
Porn stash. That guy, that's the Coke monster. Every time, it's always a guy like that. That guy's the Coke monster.
Yes, those changes were negotiated.
Looks like the biggest nerd in the room, and then you get him alone.
With my support and with my involvement. With the idea.
He's got the beat sweats going on.
Repropose the changes that
that guy likes to party,
and then take comment on them. So yes,
look at him.
That is, that's happening with my support.
Okay. Is there a date for that?
That's not a final proposal, though. You understand? We're putting them out for comment. We're going to take comment and make appropriate changes. We don't have a.
That guy grew up in Minnesota playing hockey.
And as for the other agencies, the idea is that we're all moving together. We're not moving separately. So
you never trust guys that look like that.
I don't know exactly where that is, but the idea is that we will move as a group to put this again out.
And he's got the porn stash too. He's got like a millimeter of porn stash going on.
60 days later, and we'll dive into them, and we'll try to bring.
Keeps it trimmed. He just like runs like a trimmer over it once a week.
There were merger reform.
He's got like one Coke nail. You can barely see it. It's all manicured perfectly.
I would bounce that question to Vice Chair.
Keeps that hand with the Coke nail in his left pocket, jingling change as he walks down the hallway at the news.
Thank you, Chair Powell.
At the Wall Street Journal.
You said earlier that the decision today reflects with appropriate recalibration strength in the labor market that can be maintained in the context of moderate growth.
You can see that guy getting sweaty.
It says you view the risks to inflation and job growth as roughly balanced. Given what
working 90 hours a week,
curious, are you more worried?
Hangs out at the leather place at nighttime.
Than inflation? Are they not?
Where are we going next?
No, I think, and we think they are now roughly balanced. So if you go back for a long time, the risks were on inflation. We had a historically tight labor market, historically tight. There was a severe labor shortage, so very hot labor market, and we had inflation way above target. So, that said to us, concentrate on inflation, and we did for a while, and we
keep talking, Jerome.
The stance that we put in place 14 months ago was a stance that was focused on.
You're gonna screw the bulls here if you stop talking.
Inflation, though, is cooling off the economy and a little bit cooling off the labor market. You now have a cooler labor market in part because of our activities. So what that tells you is it's time to change our stance. So we did that. The sense of the change in the stance is that we're recalibrating our policy over time to a stance that will be more neutral. And today I think we made a good, strong start on that. I think it was the right decision, and I think it should send a signal that that we're committed to coming up with a good outcome here.
Is the economy more vulnerable to a shock now that could tip it into recession?
I don't think so. I don't. As I look, well, let me look at it this way. I don't see anything in the economy right now that suggests that the likelihood of a downturn is elevated. Okay, I don't see that. You see growth at a solid rate, you see inflation coming down, and you see a labor market that's
Watch out for a ramp into the close. We're now back testing the hourly trigger on the VIX 9-day, looking for a bloodbath in the VIX into the end. We're looking for a bloodbath in the VIX, and at the end of the day, he just finished up. He just wrapped up right now. Vol should leave the market as this presser ends right now. Let me go back over here and show you guys a few things here. Give me one quick second. Go back to the main screen. I'm going to get rid of this here. Turn this off. Hold on here, guys. One quick second. I got to redo all this in the background here. I got a bunch of crap I got to do. Okay, so that's the end of the presser. Jerome wasn't willing to take any more questions. The questions were getting a little bit weird. Be careful here. Jerome needed to stay on for a squeeze higher. We're not getting that right now. They're going to reprice all this crap. They're going to reprice the VIX right now. I've got some calls on into the bell today for some upside exposure. If they stay on until the end of the day, if you're wondering, in case we ramp up into this bell. We have VIXpiration coming tomorrow. Be very careful of VIXpiration tomorrow. And they're repricing the VIX right now. So let me show you one quick thing here. On the bottom side, let me go back to this bottom right-hand side screen here. We have VIXpiration tomorrow, so be extremely careful. In and around VIXpiration, we get monster moves up and down in VIXpiration for the new contract to come out. And then we've got OPEX on Friday, so I would say to you, expect volatility on Thursday. Expect it. And then on Friday, you will see spreads in the markets. We will be a magnet towards spreads in the market. Let me bring this down a little bit because we're raising it up. Expect spreads in the markets. This is VIX 9-day. Apologize. Expect volatility in the markets for tomorrow. And then we've got monthly OPEX and DivX stuff on Friday. Go back over here and put this all back in the line here. Give me one quick second. Turn that all back on. So if you're going to expect weakness, you now have the end of, or not today, but tomorrow in particular, you have a window of weakness for at least one day on Thursday. So just be hyper aware of it into tomorrow. I want exposure today into the close to the upside, and I also want exposure today or tomorrow on tomorrow's low into Friday's close. So I have some zero dates on today. I'll have some zero dates on Friday as well. Hold on one second here. But if you are a bull, hold on, I'm in the wrong place. One quick second here, boys and girls. Trying to get this. You can see this is support right here, right? I'll bring this in right now. This is support right here. You don't want to lose this. Now, into tomorrow, if you are a bull, just beware that tomorrow you might not get that monster move on Thursday to the upside. They might save that for you until Friday. If you like, tomorrow is dangerous. Up or down for tomorrow. VIXpiration is kind of wild, right? You see some really wild moves in the market. You can see like 2% down moves on VIXpiration day, or before or right after, like in and around VIXpiration. Very sketchy trading. So just be conscious of that as we close out the day today. Be conscious of that all day long tomorrow. Trade the extremes as we come into tomorrow. And we still have not printed a downside move on the day. We have an upside expected move of 1.05% and a downside expected move in the day to 1.05%. If support gets lost today or into the close at 4 p.m., they're going to attempt to blood this bad boy down. Whoop, get that last 1%, or even into tomorrow, get that downside move. before a move higher into Friday. So be hyper aware of it. Hyper aware. There's something else to be said here into the close today, and this is the important part. We did a brief about OPEX and the seasonality trade into mid-November. When we went into QE3, this is like big free money, right? The market still stayed reined in, even on outside moves, right? Big squeezes higher, big dumps lower. We still stayed within that pattern into mid-November. So if you're a bull, just be conscious of that, and note that these banks have already placed their trades for the quarter and for these months. They have their trades in for the month of September and for the month of October, and they will be looking at the end of the quarter if we're going to make our moves higher into the end of the year for Q4 or not. So they will be paying close attention to this 50 BPS cut and the data over the next 3 months to see if conditions are improving, if they're reining this stuff in. Does that make sense to you guys? I hope it does. If it doesn't, we'll go over it tomorrow or Friday. I'll explain it in more detail to you. But I would be looking, you figure they do the 50 BPS, I would be looking for data to be looking great, at least into the end of the year. So that means to you that if they're going to rein us in for the rest of this quarter, you are going to be looking at this point for a quarterly low between now and even though it's Q4 and November 15th, be looking from now into November 15th for a dip buy for the end of the year to the upside. Like long, long. Not short, not bull market ending, holiday trade into the first of the year, 5th of the year, 15th of the year. Just don't get too crazy. Just be like, just realize that the market is somewhat reined in until the end of the quarter. There is that's why banks put on the collar. To stop upside and downside volatility and price discovery in the market. These banks love like a defined market regardless of new news, new information, and then they digest it and they take new trades for their next quarter. So just be aware of that as we continue to trade into the end of this quarter and be looking for like all this to get wrapped up in a bow on it. Like big old Christmas present, and be looking for a low to get long into the end of the year. I will be. So I want you to know that I'm going to put another giant size trade on. I'm not going to be owning the S&P 500, but I'm going to put a fucking giant spread on as a huge holiday present to myself into the end of the year. So stay tuned for that. There you've got some places to look for that too. I'm going to give you the 3 dates, 3 or 4 dates to look for that. If you leave today, just remember these dates. September 30th. I'm going to give you a bunch of dates in and around for market lows right now. September 30th. October 4th. November 1st. November 5th and November 15th. Personally, I'm saying that because the week doesn't end in specific places. If you were going to be a little bit more specific on dates, usually it's in and around like the end of that week. But if you're looking for specific dates, it would be September 31st, October 31st, November 5th, and November 15th. So whatever poison you like, you pick up your own cup of Kool-Aid and you go, yeah, I'm going to put on some action at the end of the year. Look for those dates for a seasonal low to get that last trade in for the year. And I want to warn you of something. I want to warn you of something important here. That could be the last bull market, bull run, major seasonal low that you can buy. So when we get into like December, March, June of next year, it's possible that economic conditions begin to deteriorate regardless of what the Fed does or the Treasury Department. You could end up seeing like, a bear market or at least a crash of some kind if conditions do deteriorate, if they do lose control. So if you're a bull and you're like, hey, Cap, what about this bull run? This is your last guaranteed opportunity. Or not guaranteed, but this is your last, like, not guaranteed, but a good 70% chance at a seasonal bull buying opportunity in this bull run. There is a fair chance that we are getting at the 0.7% point at the, like, if we had a bull run, bull market, we are likely at about, like, if you had like a 0 to a 1, we're at like 0.7 right now. So mark those words that I'm saying to you. You have one more chance. That's not guaranteed, but a fair chance. And then we'll start looking when we get into January, March, June, July, and we'll start looking to see if they can extend this. We'll start looking in January, March, and June to see if they can continue on with the scam for a year and a half, 3 years, or if they don't, or if they limit the damage, or if we actually enter the lost decade or not. I see that ahead, so this bull market should end. At any rate, yeah, I think that's all I got for you today. You guys have anything else for me today at this point? Yeah, I'm long right here. I'm long into the close. I have exposure to the close, and I'm going to get some more exposure on whatever tomorrow's low is as well. I don't trust these guys at all. I want to see us ramp the bell, just green bar it up. And I'll buy Thursday's close too, whatever the low is on Thursday, 2:30, 3:30 in the afternoon. I want to catch that like 2 or 3% upside fucking green bar bullshit. If it's there, it could print 6 figures, so I'm on that trade. I'd be really afraid of not really afraid, but I would say there's 2 things to this. I would be lessening my concern right now on a lost decade. At this point, it seems like they're ahead of the curve to me in like a real doom scenario. I think that's fading. But I would most certainly say that 2025 to 2027 and a half. So 2025, 2026. Oh, no, I'm sorry. I apologize. I would say the year of 2025, the year of halfway through 2026, things should begin to deteriorate. By 27, shit should be on fire. And if they're going to do this now, if they're in this part of the cycle, like the start of a policy shift or change, it's probably going to take them a year and a half to get there. So to get to that point. So hopefully they're able to stave off, that real ugly lost decade potential. So we'll monitor it as we get into next year and see how far they can extend this out. Personally, I won't own the market after the first of the year in any way. I don't own it right now. I'm actually fully out of the market for the first time. I'm out a second time, I should say, in like a month. But I won't intentionally buy like SPY again for year and a half, 3 years, somewhere in there. Unless something fundamentally changes. I'm assuming that I'm out, and I'm assuming that I'm stockpiling cash to buy a major dip in mid-27 sometime. That would be my last hoorah in the market too, if it goes to that plan. I'm assuming I would be out by. I'm assuming that run would be 3 to 6 maybe years. So, you figure that's a total of about 10 years, right? 8 to 10 years. Probably be my last my last foray into the stock market. And I'll be with you guys here for the next 8 to 10 years, I think. That's my assumption. And then I'll be out. I'll be retired. That'll be it for me. I just don't want to get caught in it. I'm unwilling to expose myself to if this is a long-term debt cycle ending, I'm unwilling to get exposed to it. I'll wait and see if they're able to thwart that from happening. Oh, get a haircut like the reporter. That haircut's terrible. Let me move this white bar right here so you can see it. This is the pivot point, by the way. That white bar right there is the pivot point. Anything above it is bullish. Anything below it is bearish. 4-hour block is right here. This is where all the support for the upside moves on the rate decision all lay right here. You lose that, and you start getting bearish. You don't want to be losing this at all. You start losing that green bar, and we're going to start bam-bamming. Bamity-bam down here. Get a lot of room down there. What else? I think that's it. We'll go into more detail on this stuff. I've got a pre-outlook for 25 that's almost done. I've got an outlook for next year, believe it or not, and what to be looking at as this data comes out. You guys are going to want to pay very close attention. Like, the data over the next 3 to 6 months is going to define a decade, in my view. It's going to define literally almost a decade ahead for us. You wait until that housing data comes out, guys. That housing data, that next like Case-Shiller shit, or Case-Shiller in December. Oof. If you don't know what I'm talking about, you should go out there and check in on Wolf Richter. This guy's all over it. Like, this guy, and my own real estate group is all over it. Like, it's not just like Realtor.com. Like, even housing investors, they're all over this shit. They've been all over it for months now. And if people are telling you that the housing market is like overpriced or housing inflation, that's not happening on the ground. That is not happening. Not happening on the ground. Not happening. Not happening. He leaked a little bit of it in that presser, but he lied about some of it too in that presser. That's probably why they see PCE coming down too. Why they're not as afraid about inflation. They already know that it's coming down. They already know that what's being triggered. We're getting a housing roll. I don't know if you know that, but there should be panic in the streets by next spring, summertime in the housing market. Time is it right now? 3:38 right now. Let's see if we can get those Robin Hooders out of here. I wonder if I should sell the clothes too. If I should sell like 4:15 for tomorrow. Yeah, I've got nothing for you guys. I'm waiting for the close. I can't go short right now until at least 4:15. I'm still in range too. I'm still like I'm over here somewhere. They're just dicking around down here. 50 BPS. Fuck. 50 BPS. And there was language of another 50. There was one dissenter. That's not normal. And then they're pricing in only 25 BPS before end of year right now. The FFF is pricing in only 25. The language is different, of course. They're pricing in a full point. I don't believe any of those projections in 2026. I think they start chasing hard and heavy into next year. I think by summertime you're going to see. I believe by summer of 25 you're going to see inflation start to rage. Start getting long on oil next summer. You know, like September, December of 25. There ain't no way they're going to be up 3 points into 26. I think they're out of their fucking skulls. I could be wrong on this, but I think they're out of their minds. Like, I think they've had a great run of what they're doing, but I don't believe, like, there's a part of this where, there's a whole part of this where the normal business cycle, they can't stop. They can only, like, blunt it. I don't think that they have the full control over normal business cycles. I'm not a believer in that in any way, shape, or form. Nice. There's Gunlock. Look at Gunlock. Double line capitals. Gunlock says expect to see weaker economic data in coming reports. Says CPI could go down below 2% in a matter of months and stay there. Fucking Gunlock. Savage. The doom's already being scrolled out. The thesis is already out on public. Conditions will deteriorate. There's nothing they can do. It's like you talk to Gunlock and he's like, we shouldn't cut anything. Raise rates. They cut 50 BPS. Gunlock comes out. Oh, the economy's fucked. There's nothing they can do. You can do that bear thesis is gonna, like, the next 2 weeks. I'll already tell you what the bear thesis is gonna be. So it's hilarious. The same bears that were telling you last week not to do any cuts, I'm gonna tell you right now. The same bears that last week told you we should not cut are gonna tell you that there's nothing they can do by cutting. Terrible. So terrible. I know. It's so true, Nettie. How do you live with yourself like that? Man, now I want to buy calls into tomorrow, too. I want to buy more zero dates for tomorrow. Just like buy them today, buy them tomorrow, and buy them Friday. Like, just like no care in the world. Any low, buy every low. Buy every single one, like, because I want that like 3% up day. Just like ram up 300 calls every single day for the next 3 days. Like, I shit you not. These guys are terrible. These guys are probably like deleting all their tweets right now, and they're like cleaning up their websites, and they're just going to switch to the Fed can't save you. Last week, I thought we shouldn't cut. This week, I think that any cuts they do doesn't save you. The economy's fucked. It's like awful. It's like the worst thing in the world. I know, that's Gunlock. It's terrible. It is absolutely terrible. You know what the worst part of this is we'll likely hit that nice fat low, and we'll likely hit that nice. I almost lost power just now. Heads up out there. My power just flashed on me. I could lose the stream. Just a notice to you though. I'm going to just leave you with some parting words here. It's 3:44 right now. The Robin Hooders are getting out. I'm going to leave you with some parting words before tomorrow, okay? Before you go out there and start consuming the Kool-Aid and you get really bared up, right, from now into the election, please do me a solid. Mark my words. Mark my words. They are going to roll out a thesis to you of doom and gloom, and you are going to drink that Kool-Aid. You might not take the trade, but you're going to drink it. And by the time we have a seasonal low, right, for the election, you'll be getting short. And they are literally going to sell into you, get out of that thesis, and we're going to go up again. So think about that from now into mid-November at the latest, okay? Be aware of that now. And you're going to be like, oh, Cappy told me not to drink the Kool-Aid, and now we've got a seasonal low November 15th, I'm max short, and you're going to get run over. They're going to rip it up on you. So just be aware of that, okay? Any highs? On the next high would be Friday or the Friday of the first week of October. If you're not well hedged, make sure you get a hedge for that downside seasonal low into the middle of November, okay? So just be aware of that as well. And don't drink the Kool-Aid. Don't be like selling bottoms and shit. Don't do that. Please. Please don't do that. Please, please, please. We've seen that too many times in this show. You guys get here and you're like, Cappy told me it wasn't that bad. It's like now like November 14th, and you're like, I am max short right now. You were wrong. And then they run it up on your ass. Don't do it. Don't do it. Catch a nice high. Get a nice hedge on the market. Sell that shit out in mid-November. Don't listen to your fellow bears out there telling you crash. Market's over. Bulls are done. Don't be listening to Gunlock. Guy's out of his fucking skull. Don't listen to him. The guy's a liar. Sorry, but he is. Yeah, you'll probably get 52. You'll likely get like between 52 and 48 mid-November. You should be able to get it. You should really get like 52. That's where I want to get long. Anywhere between 48 and 52. If they can't get it done, 52. If they can get it done, 48. They can make like 52 quicker than later. I'll be looking for 48 to get long for end of year. Should be a great fucking trade too. It's like all the bread. That's a bread and butter trade, man. Bread and butter, dude. It's like that shit keeps you going all year long, all year long. Now, there's no flirting here, by the way. I don't know why you guys are all talking about flirting. This is all you need to know right here. That green box right there, that's it. That's all you need to know. If you're a bear, if you are a bear, a seller, you need to get underneath this and get a new low. That's what you need. If you need a directional change, that's it right there. That's all you need to know right there. Nothing else. This is a bottom for bulls right now. You need to get underneath it and then get a new low. You do that, we'll start making our way lower. Fairly simple. You can actually watch it happen. Fairly simple. My calls are at 0. I'm going to buy a bunch more right now, too. That's too much. Hold on here. Just lost $3,000 in that trade. Woof. Long again on 563. Trying to buy this last 15 minutes here. Got another 100 pack. Come on. Whoa, I was trading 27 on that just a moment ago. 17 cents, 27 cents. $29.30. Maybe I should have made him for tomorrow. I'm also going to look at Friday right now and see what they're priced at. Friday 570s are 37 cents right now. It's actually pretty cheap. 2 days to go, 570. I don't think we'll trade 570 though until Friday close, so that might be a little too far outside the money. Man, I think I'm going to add some of these 570s for Friday, just in case they go the upside. I got so just so you know, I've got calls for. I have a bunch of calls out there. I've got a 100 pack that are zero right now. I've got another 100 pack for 63 for today, and I'm about to add 570s for Friday, 100 pack. The next few moments here, they might burn. Tomorrow should be a down day. But I want the exposure for Friday. Maybe add some more calls on Thursday close if they sell us down. I don't want to risk missing a ramp. Yeah, I got the money to fucking burn on it. All right, hold on here. Yeah, that's where I'm at right now. So we'll pin that one too for you. Yeah, I want that exposure tomorrow. I don't trust this. I don't trust these fucking dealers in the least. I don't trust them. And I don't really care if I spend this money because I want to make like 34. I'm trying to make like $40,000 in this trade, and I can expend 10 grand if I need to get it. So 10 grandish or so if I at the top buy probably, and I'll put one more buy in on Thursday. I just let you know in the Discord what my positioning is in the market right now, and I'm also going to be looking to buy the low tomorrow, whatever the low is, 3:30 in the afternoon. If they do dump us to the downside, I'm going to be looking to buy that for Friday, for the Friday close, for 4 p.m. on Friday. You shouldn't follow that trade with me. You should not, because most of you guys probably don't have that money to spend. But I am long into I'm long into the close today, and I'm long into Friday as well. I have exposure on the Friday. Yeah, I'm basing this on prior path changes. We have examples of it in the past. So I've already seen this happen. So I've already been there. Already seen it happen. I'm gonna tell you we can't get here, we can't get there, and then all of a sudden we're there. Bam. Like we can't get here, we can't get there, and all of a sudden you're there, and you're like, oh shit, I missed it all. So I want the exposure to it. Even if we don't get there, I don't care. I just want the exposure. It's like a Mexican standoff. For the rest of you out there, Vixpiration tomorrow. Be very careful. Vixpiration dates. The Vixpiration is Thursday, the 19th. They love to dump the market on Vixpiration, so be extremely careful. Right around 2:30 in the afternoon on 2:30 in the afternoon on that Thursday, you should see a ramp into the end of the day. There's usually a hedge fund is out there buying the close on Thursday, like 2:30 in the afternoon, and they ramp it up and then they run it up Friday, and then dump it on the market on Friday. Close that right there for you, so you can see the price action of the close. Leave that there for me. They're going to try to tuck it down in here for you. They're trying to get right underneath. See how they're trying to sell this right down, get underneath that 4-hour block? They want to get that close before 4:15 right down there and get underneath that block down there. Cash, our RTH over at this point. Now we're in an illiquid market. Watch out. They'll try to dump this shit down to the depths of hell in the after hours. I'll catch you guys tomorrow at 9:30 in the morning. I'll be here. If we do ramp up into 4:15, I'll let you know in the Discord if I get paid or not. And I've got exposure on Friday long, and I'll be trying to buy another dip on Thursday low if they do blood us. I've got no 0-day puts for tomorrow or 1-day puts for tomorrow, mostly because I don't trust these guys. I think they're lying. I've seen prior examples where they'll like do a delayed reaction. They like burn you all out on the FOMC, and then they ramp it without you. None of you guys are long. You guys are all short into tomorrow, so I'm doing the counter trade to you. I'm actually counter trading you and your bearishness, so hopefully they can fill my pot, not your bucket tomorrow. I will see you guys at 9:30 in the morning. Thanks for showing up today. I really appreciate it. Trade the trigger, baby. Show up tomorrow if you see the market burning, or if you want to show up on Friday, see what the OPEX expectation is, and I'll